Hello everyone, welcome to this wonderful internal audit series, refresher course on internal audits that has been scheduled by WIRC. Today, believe me, we've been all been excited, not for one, two, but five good reasons. The faculties, the panelists that are lined up for today. I think anyone who wants to know anything about internal audit, these are the people, these are the set of individuals, these are the personalities, these are the academicians who have set new benchmarks for anything that is to be considered as internal audit. So I think let's brace up for a fantastic ride today. The refresher series is about to begin. Before we begin, I welcome, you can see a fantastic panel, and it's a privilege for me to be sharing screen with these luminaries, these legendary personalities on screen. I also welcome Chairman Manish Bhai on this. But before we begin, let's put our hands to the heart in respect of our ICL motto song.
य एष सुप्तेषु जाग्रति य एष सुप्तेषु जाग्रति कामं 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 कामपुरुषो पुरुषो निर्विमाणः निर्विमाणः तदेव शुक्रं तद्ब्रह्मा तद्ब्रह्मा तदेवामृतमुच्यते तस्मिन् लोकः शतः सर्वे तदूनात्यति कश्चन एतद्द्वैता 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 एतद्द्वैता.
Thank you, everyone. Good evening and welcome once again to all of you. Respected Narendra ji, Satish, Shenoy sir, Buddhadeb, Samanta, our faculty for today. Welcome all of you today in this session. I'm also delighted to have our chairman, C. Manish Bhai, with us, and coordinator Sanjay Nikam, my colleague, and Sachin Maloo ji as coordinator for this session. First of all, at the outset, let me congratulate my colleague in the council, C. Murtuza Kachwala, for designing this wonderful series on internal audits. And I think it's a pleasure for all of us to listen to these legendary personalities. To begin with, let me invite Manish Bhai to please share his address and his vision that he has set up this entire phenomenon on internal audit. Over to you, Manish Bhai.
Thank you, Arpit. CA Narendra, Aneja ji, faculty of the day, Buddhadeb, Samanta ji, Maloo ji, moderator, Satish, Shenoy ji, and all other my colleagues. It's really great, and I should say a privilege for me to share dais with Aneja sir. I should say a god of internal audit who has started this practice of internal audit in India. So now we are seeing a lot of opportunity for all of us in this. So really thank you, sir, for accepting our invitation and part of this program. Apart from that, 1st July, we are going to celebrate our Foundation Day, CA Foundation Day, 73rd. And for that, WIRC, as usual, is having 16 Mile Sur Mera Tumhara program, which will be live on YouTube. So you can watch us on our YouTube channel 6 p.m. to 8 p.m. on 1st July. Murtuza bhai is doing fantastic job. Really a great structuring of this program, 5-day series, 3 hours each, 15 hours. All stalwarts of the internal audit professions are here. He is also heading a committee for members in industry. Today itself at 5:30 p.m. within 25 minutes, we are going to launch first time CFO Forum, where we are having an interactive meeting with CFOs who are a chartered accountant of various industries. And this will continue on all 4 Saturdays, evening 5:30 to 7 on a virtual mode now. When it will be feasible, we will definitely start on this physical mode. Apart from that, as a chairman of Members in Industry, he has taken another initiative called CEO Speak, a journey from articleship to CEO, a chat show. Satish is smiling. The reason being is Satish is going to moderate that show, and where we will invite various CEO, managing director, chairman of a company who are a chartered accountant. They will share how they become CEO, what extra effort they have done. Can a chartered accountant become CEO apart from accounting, taxation, finance, maybe tax, internal audit? Apart from that, over and above, he can become CEO. So that what we are going to start next month. So thank you very much, Satish ji, for your acceptance to be part of this. Apart from that, we are also going to launch, already launch our WIC referencer. Who's interested can take that. This time we are focusing more on technology, data analytics course of 60 hours. We have already launched. Second batch is going to start today 6 p.m. It is 60 hours course for rupees 9,000 only. Third batch we have announced for 18 July. Those who are interested can join the same. So again, credit goes to Murtaja Bhai as well as CA Arpit Kabra for structuring and doing this course. Apart from that, WIS is also available on a social media. You can follow us on our YouTube channel. We have also started Telegram channel with the name WIRC Connect. To connect with the WIRC with all these things. I will not take much of the time. Thank you very much for joining this course. To all the participants, thank you very much for accepting our invitation. To all the faculties, over to you, Arpit.
Thank you, Manish Bhai. Thank you, Chairman. Moving on next quickly, let me get this privilege of introducing legendary personality, Narendra Aneja ji, the president of Aneja Associates, ex-global board member, the IA Inc. Close to 4 decades of experience, in governance, risk, and compliance assignments. Narendra ji has, is a name, chief executive of the associates, and employs about 350 professionals as governance studies, risk assessments, management, and operational audits of over 100 companies. He's a fellow chartered accountant, certified internal auditor accreditation, certification in risk management assurance from the Institute of Internal Auditors, US, and holds an MBA from the Wharton School. He's a gold medalist, ICWA, a Tata Scholar, and was ranked on the directors list at Wharton in 1978. Past national president of the Institute of Internal Auditors of India and the Asian Confederation of Institutes of Internal Auditors. He represents IA on the International Professional Practice Framework Oversight Council. He has made presentations at numerous international conferences in India, US, Malaysia, Dubai, Sri Lanka, Qatar, Thailand, and Colombia, and the list goes on. But it's really a privilege, sir, and we welcome you to this council, to this wonderful series.
Thank you.
Thank you. To begin, we invite you to this.
Arpit Bhai, he has also completed a data analytics course very recently, last month.
Wow, wonderful. Thank you, Satish ji, for pulling that in. One more feather in his cap. As you can see, he's absolutely young. That we see that, and evolving.
It's an example. It's an example to show that you have to keep up with the times. We'll talk more about it later on. Yes.
Absolutely, sir. So we welcome you today, and we want to start this refresher course with a fireside chat with you. But before I could, fire you with my questions, I would request you please give your experience. Please share your vision and ideas about the entire scope of work that you've done. Narendra ji, over to you.
Okay, thank you very much. If I had known that you're going to give such a nice introduction, I would have called my wife here. Unfortunately, she is not there, but missed opportunity anyway. Thank you very much for inviting me, and what a well-designed program you have here, Raman, and what luminaries to address. It's probably one of the best designed courses and the best kind speakers who could possibly speak on these subjects. You have put them together. It's like a necklace which you have made of pearls, and I'm sure all the 250 participants that you will have will benefit a lot from this. The way I want to structure this program is that I'll speak for about 10 minutes, and then we can have question answers for the balance 10 minutes. 10 minutes is not too long a time to talk, or it can be a lot also. What I intend to do is to dwell on two key issues that are happening in the profession. One is the change that's happening in the IT sphere and how we internal auditors have to sort of prepare for it. And the second is the change which I want in the mindset of all internal auditors. And so these are the two key sort of elements going forward, which are going to be very important and about which I need to talk now. As far as, well, let's talk about technology first. Most of us have started our careers by being tech scared, and I was very much there myself, and that's the reason why I did this course on analytics, to sort of begin my journey on getting more familiar with technology. So we start off as tech scared. Most of us unfortunately remain there. Then we get to tech familiar, which is a stage where I am at currently. I'm trying to get familiar. Then we move on and become tech savvy. But the final destination, which all of us internal auditors, if we want to be successful internal auditors, the fourth stage that we have to reach is tech fearless. We are not feared today about debits and credits. That's the level of competence that we need to get at, even in technology, if we have to succeed and go forward in our careers. That's the first message that I would like to give to all of you. Now, why is this familiarity and fearlessness with technology so much required? Let me give you a small example. And I don't know these figures. I've not authenticated these figures, but this is what I have picked up from a very reliable journal. In the year 2013, the entire world produced 0.1 zettabyte of data. 2013, 0.1 zettabyte of data. In 2020, last year, the world produced 4.4 zettabytes of data. So it's like 4 times more in less than 7 years. Now, as you know, billions of bytes go to make 1 gigabyte. And trillions of gigabytes go to make 1 zettabyte. So you can imagine the volume of data that's being produced in the world, and we have to deal with this data. Clients are going to ask us to analyze this data, whatever pertains to them. And we cannot do this manually anymore. I mean, it has to be access technology, and I'll give you a few examples as we go by. Let me give you another example how technology is so very important in our lives. Go back in history. Every single war since the beginning of history has been won on the backbone of technology. Amongst the first world conquerors was Alexander the Great. Now, he won his successes. He defeated Persia, which was again a superpower in those days, on the back of what was called as the phalanx system of formation. The way they went to in the war, they had a particular formation which they did very successfully, which could not be broken down by the opposition parties. Then came Genghis Khan. Genghis Khan, again a world conqueror, conquered the world on the basis of gunpowder. Then, of course, came the British to India. Then all of us know about the World War II, how Germany was leading in World War II. And finally, what did bring Germany down? The atom bomb, technology. Science applied to technology, which brought Germany down. Look at the world today. I mean, all of us are going through this COVID. What is COVID? An element of virus which has been introduced into our lives. We still do not know fully how to eradicate it. Now, this is in terms of our health. medical issues. Look at, there are other viruses that are going around. How many of you know that recently there was an attack on pipelines in the US? And this was introduced through a virus. Again, the entire nuclear program of Iran has been destabilized, whether it's by Israel or whether it's by the US, again by introducing viruses into their systems. You'll be shocked to know that whilst we were fighting with China in the recent last year's Galwan war in Kashmir, Bombay had a power outage. The government of India has not acknowledged it so far, but the foreign press and research institutes across the world have said that the power outage in Bombay was due to a Chinese attack on the power systems in India through viruses. This is technology for you. Now we are talking, we are talking about on a national scale. What's going to happen to your companies? Viruses attacking your company. Unless you know technology, unless you know how to prevent these kind of occurrences, the companies no longer want us around. So this is the first message I want to give you all. You have to adapt. You have to get fearless about technology if you want to succeed in your careers going forward. Second key message that I want to give you, and I want to quote you two sort of quotations here. The first is by Oprah Winfrey. All of you are familiar with her. The quotation goes as follows: "The greatest discovery of all times is that a person can change his future. A person can change his future by merely changing his attitude." No knowledge, nothing, just change your attitude. How do you see things? That can change your entire future. And the second quotation is by Lewis Carroll. He says, if you don't know where you are going, any road will take you there. Keep these two quotations, they are very profound. Keep these two quotations in front of you, and you know how you have to change your mindset if you want to succeed as an internal auditor going forward. So what is the impact? What is really happening? Why do we need to change our mindset? You know, all along we have been told, we have been taught, we have read, the textbooks on internal audit tell you that you look after risks, you look after controls, then came governance, you protect value for your organizations. You protect your organization's value. Going forward, that's not sufficient. Your organizations today are expecting you to create value for them. Not only protect, but also create value. Okay? So that is the one big change that is happening. The second major change that is happening and which we have to adapt to as internal auditors is that all along we are told to maintain our independence. No longer true. This is the age of partnership. This is the age where independence is not isolation. You have to work with the management of the company to create and protect those values. It's a big change. I mean, you know, if you go to see how we have been working so far in silos and keeping our distance from management, you don't want to be accused of being friendly with somebody in management. All that is not going to be true anymore. You will still have to maintain your objectivity. You will still have to maintain your independence, but walk hand in hand with management to protect value as well as to create value. This is a big mindset change, which we probably will take some time to sort of see how this is going to get implemented also. But be ready for this big change that will happen, and that change has to start from your mind. Forget technology coming from outside. This is a change as big as what is happening in technology, but in your minds. You know? Richard Chambers, the president of the IIA till recently, put it very, very aptly, and I will just take this one line. He says, internal audit makes trains run on time. Okay, you make sure that things are fine, systems are working, processes are working, the trains work on time. Now, when you have to create value for your organizations, you will also see, you will also define what is the profitable routes that you have to, that your trains should run on. What are the additional stations that your trains will have to go to? Thereby, you create value for your organizations. Okay. So thank you, my friends. These are the two key messages that I wanted to convey in these 10 minutes. One, be tech fearless. Master technology as much as you can. And the second is be prepared to change your mindsets completely. Completely. Whatever you have thought of internal audit so far is no longer going to be true. And you have to start thinking afresh as to how can you deliver value to your organizations. Thank you.
Wonderful, sir. Wonderful. May I now request, may I invite you now for a fireside chat with us? We've got some questions for you, and we'll try and put them across to you. Please let us know your thoughts on them. The train example that you've given, I think it's a wonderful example that will set us really thinking into what is the scale of implementation that we have. So 4 decades of your working as an internal auditor, 4 decades, 40 years. How do you see the internal audit, the paradigm change from then to now? As you mentioned, you'd have to do a mindset. With IBC, what do you think should really come up into internal audits?
So, my friend, to some extent, I think I've answered this question in these first 10 minutes. I remember when I came back to India in 1981, we were still very much in the throes of a financial internal audit. Internal audit at that time was only an audit of financial transactions. Then we moved to the concept of operational auditing. Then we moved to the concept of management auditing. And as such, the scale of auditing has always been going up. Typically, we looked only at financial transactions again to begin with. Then we started looking at controls. Then we started looking at risks. Then we started looking at governance. And now from governance, we are now looking at how do we create value for our organization. So this is the kind of journey which has happened over the last 30, 40 years. There have been changes in terms of the scoping of our work. There have been changes in terms of how we do our work, the extent of technology that we have applied to our work. I don't think there is any sphere of our work which has left untouched or which has not sort of made dramatic progresses. And I dare say we have not even seen not even 50% of the change that is likely to happen over the next 5 to 10 years. We are in for very dramatic changes going forward.
Right, thank you. So the second question, has there been a change in the expectation of stakeholders largely? What was earlier in terms of the value of delivery? We see nowadays pricing being a very, very key differentiator in getting these professionals on board by management. What was earlier expected and what is expected now? So do you see change or drift from stakeholders' expectation?
There is, as I said, so this is my second message, that there is going to be a big shift in terms of what value are you adding to the organization. Now, concepts of value, of course, differ from organization to organization. Some people are very happy, some organizations will be very happy if you have improved their controls, if you have identified risks for them which they could not sort of foresee themselves. As you move from hindsight to foresight, I think what is now expected of internal auditors is that we don't look at past transactions. We look at the future and say what is going to likely to be happening and what is likely going to affect my organization and how do I take care of those kinds of situations, So that is the kind of value which companies are now sort of looking forward to expect from internal auditors. Looking into the future, I think that is going to be one of the big expectations of corporates from internal auditors. But again, the concept of value definition is very, very difficult to define. For some, as I said, it could be improvements in risks and controls and governance. There are other clients, we deal with almost 200 companies and you get a whole range of expectations from clients, And at times it's very difficult. How do you adapt to all these different kinds of expectations? There are some clients who expect cost savings from us, Now, fine, that's not my primary job, but yet you have to sort of then deliver that kind of value, because that's the kind of value which that particular organization is going to be expecting. But still, it's very difficult to say what exactly is value to every organization. Let me give you a small example here, which will really tell you what is value and what is the client's going to be expecting from you going forward. A good friend of mine, he's the sort of internal auditor to a medium-sized NBFC proprietorship. Recently, he completed 5 years with that company, and as per the new RBI guidelines, they had to sort of retire, because if you're an individual internal auditor, then you're given 5 years. If you're a firm, then you get 10 years. Now, so this person, he sort of did his thank yous in the last audit committee meeting that they had, and he came back. Next day, he gets a call from the managing director of the company, and he says, as we know, we took the new appointment to the board, and the board questioned as to why you are being, why the company is changing auditors. The board has appreciated your work, and they have asked me to talk to you and see if you are willing to change your organizational format. Are you willing to form a partnership so that we can continue with that company? If a company is willing to ask you to change your organizational status so that just because the company can continue with you, definitely you have created value for the company. So look for value in issues like this rather than in mere numbers, that I have improved 20 controls, or I have. Does the company want to continue your partnership? That is true value creation.
Wonderful. So do you see a great role?
I'm sorry, do I see?
Do you see a great role that internal auditors can play in the IBC regime, like avoiding clients to get into an NPA mode?
I'm sorry, I'm not very sure of the question.
All right, so moving on next, then I'll come to this, we'll set out context to that. What are the essential skills do you see now in these days for an internal auditor?
Essential skills for internal auditors. There are only two skills which make a successful internal auditor. And if I'm getting your part of your question earlier, it is not knowledge. It is not knowledge of any accounting, not knowledge of auditing, of regulatory environments. All this is a core necessity, yes, but it is not essential for success. What is essential for success for any internal auditor is relationship building and communications. These two are the two success stories for internal auditors. You could be you could get 100 on 100 in your accounting and auditing, but if you cannot form relationships, if you cannot communicate well, you will never be a successful internal auditor. So if you ask me, these are the sort of two key requirements for successful internal auditing. You have to establish a relationship with people, because you're constantly dealing with people. You're going to comment on their working. You're going to tell them how they can do their work better. Why the hell should they listen to you, right? Unless you can sort of form an empathy with them, and if you can form a relationship which tells them, yes, I can contribute to your well-being. By telling someone, you see, the whole problem with internal audit is that it is seen in a very adversarial way. It is not adversarial, it is partnership. Can you convince your clients that you are really there to partner with them in their growth, in their, moving up in their, whatever be their objectives? So that is the true essence of internal audit, and that's therefore this formation of relationships becomes a key ingredient of success for us.
Absolutely. Moving on next, so we have a lot of young chartered accountants today who are attending this webinar also, and probably they look up to as one of their career or maybe to switch into internal audits. So what is your message apart from this two that you mentioned, relationship and communication? What is largely your message who want to build their career in internal audit?
A lot of people. Yeah, a lot of people have asked me why have all these years, 30, 40 years, why have I just stuck to internal audit and not branched out into the various other professional routes for which our ICI does prepare us and prepares us very well. But I've just stuck to one field. And that's not because I don't have the brains to do those other things. But I found it of such great interest, internal audit. I've all my life I've believed that internal audit is a profession without a perimeter. Okay, I'm sure you all know what a perimeter means. Basically, it's a boundary, right? A boundary restricts. Internal audit is a profession without any perimeter, without any boundaries. As long as you have it in you, as long as you are professionally qualified for that, as long as you're willing to study further, you can sort of branch out into any field that you like within this entire field of management. Of course, you have to prepare yourself. You have to study for that. I mean, for example, today, one of the latest issues that is coming up in internal audit is to do an audit of ESG, as they call it, environment, social, and governance areas. Now, our courses don't teach us, neither does the ICI as of today prepare us for that, neither does IIA prepare us for that. But yes, it's a lot of learning as we go along. And if today you can prepare for it, you can, environmental auditing is a great field in itself. I mean, it's going to be of tremendous importance going forward. Now, so if you can prepare for yourself, nobody's going to question why you come to do an internal audit of those areas. So be ready to prepare yourself, be prepared to sort of put in that effort, and you will have a world which is without borders. I truly believe internal audit is a profession without borders. Yes, but keep preparing yourself to cross those borders. So as far as young members are concerned today, a few years in internal audit can lay a very strong foundation for a career in internal audit. And if for some reason, whatever reason, you want to go beyond that career, then again, it's one of the best foundations that you can have. The exposure it gives you, you join an organization and as part of an internal audit team, you're looking at sales and marketing one day, you're looking at production the other day, the third day you're looking at supply chain, so on and so forth. I mean, the vast gamut of knowledge that you gain is unprecedented. And I think it's a very good foundation for any career in management in any organization.
Dynamic, right? So ESG, friends, is a new word to look out for. The next question: what is the level of maturity of risk management in India? The risk managers, are they able to highlight all risks on timely basis? And is the regulatory requirement for risk management enough or evolved, or what do you think?
So you have a three-part question. First part is it mature? Unfortunately, as it happens in life, and I think there should be one of Peter's principle or somebody's principles, that people who don't need risk management, they exercise risk management. Companies which need to do risk management don't do risk management. That is the unfortunate truth. I have so many promoter companies, and these are not small companies. They would still be in the range of anywhere from 1,000 to 5,000 crores, but still being run by promoters, and they just don't believe in risk management because they think they know it all. They have created a company of 5,000 crores. So who comes and dare say that you guys don't know how to run your business? Unfortunately, risk management is seen as that I don't know how to run my company. So in that sense, it is still not a very mature field yet. I mean, people don't see the benefits of risk management and how that prepares them for the future. So I won't say it's a fully mature. Sorry, what was your second part? The second
So
part of your question.
the second part is, are risk managers. So I think wonderfully answered for the first. That the perspective that you've said is correct. But do you think risk managers, are able to highlight all risks on timely basis?
I hope, and I would be glad if they don't do it, because if they were able to predict every single risk, then you don't really need risk management. Then where's the need for risk management? And I don't think you would have to be God to be able to see every single risk that's going to come forth. So very honestly, I don't expect risk managers to be able to foresee. I mean, which one of us foresaw COVID, right? And mind you, when COVID first struck us in about March last year, we spent a whole year watching a lot of TV. And I was shocked. I was shocked to see the number of movies, the number of TV serials, which I've seen over the last 1 year on a pandemic, on pandemic, and as to how viruses can invade countries, how you can destroy enemies with viruses. And this has been going on for the last 7, 8 years. And yet the world was so unprepared when COVID finally struck us. So in a way, I don't expect all risk managers to be able to really foresee every single risk that's happening. Coming to your third part, I mean, is the regulatory environment adequate for risk management? I'm going to give you a very contrarian reply here. I think risk management is a part of good management. I don't think it's a part of regulatory requirements. Every company should be doing risk management as a good management practice for their own benefit, for their own survival. It is not something which a regulator has to, dictate that you need to have risk management. Of course, it's done in regulatory controlled environments like banking, elsewhere, NBFCs, where possibly, as I said in answer to the first part of the question, that people are still not ready for risk management here. And therefore, the regulator then therefore has stipulation as to how it is to be done and so on and so forth. But essentially, risk management is a part of good management. And it really should be, it should remain there.
So amazing. I think you've answered most of our questions that we wanted to have from you. The perspective that you've set in, I think that's really incredible, because really we need more and more of these kind of risk management and maturity that people understand between really what is risk management and running businesses. So fantastic insight, sir. Thank you for your time. I would now request my colleague Sanjay Nikam to please give a well-deserved vote of thanks, and let's move on to the next. So over to you, Sanjay bhai.
Thank you for this opportunity. I'm obliged.
Thank you. Thank you, Arvind bhai. Good evening to everyone. Let me express my honestly that this is honor and privilege for me. Actually, I'm thrilled to be here with such a star-studded forum. Aneja sir, we have heard a lot about you, and first time I'm hearing you, and I understood what the legendary personality you are. Samanta sir, Shenoy sir, Unwala sir, my colleague Chitra madam, and Arpit Kabra. Really, the WRC has done a tremendous work here. They have selected gems from the ocean and presented before our members for knowledge sharing. And this is going to be I'm very much confident this series is going to be a wonderful series for our members. I thank you and extend my gratitude to WRC for this relentless work. And when in this difficult time, everything is slowed down, but our WRC is doing incredible job, and they have intensified their activities. They have not stopped the knowledge sharing for members. So thank you very much, WRC. Move on.
Thank you, Sanjay bhai. Thank you, Narendra ji, and we really look forward to hear from you soon. And as you mentioned, some of the brilliant series that you've seen, please do share with us. I think we want to move over from masalas and everything that we have. So we would want to have some more insights on these virus attacks and wonderful insights once again, sir. Thank you very much.
Thank you.
All right, friends. Moving on next. After hearing from the legend himself, now let's move on. I'll request Sanjay Bhai to quickly introduce my earlier boss, Huzeifa Unwala ji, whom I have worked with during my articleship days. Sanjay ji, over to you.
Thank you, Arpit bhai. Thank you very much for giving me opportunity to introduce Huzeifa Unwala sir, because he is very known faculty in WRC and some on everyone must have heard from him. So this is our privilege to have him here. Today, Unwala sir is taking one topic on risk-based internal audit plan, SIA framework. So I have been given responsibility to introduce him. Huzeifa Unwala sir, he's FCA CISA. Huzeifa is a senior partner and founder of JHS Associates LLP. Huzeifa is on the board of Dixon Asia Pacific Private Limited as a non-executive director. He has got 23 years of composite experience in serving international large and mid-sized clients in the area of management consultancy, business advisory, fraud investigations, internal audits, IT advisory, SOX, IFC, implementation assistance, and enterprise-wide risk management. Huzeifa has played leadership role in his career, mentoring large audit teams in the past, serving global clients and developing practice innovations. He is an author and speaker and has spoken at various professional seminars, events, and industry forums. So I'm giving handing over charge to the Huzeifa sir for taking this session ahead. Thank you very much.
Thank you, Sanjay Bhai. Really welcome you, sir, on WIC platform, and we're really privileged to have you here. So your session on risk-based internal audit plan, SIA framework. So over to you.
Thank you, Arpit, and thank you, Sanjay Bhai. Thank you so much for inviting me today here to this forum. It's my privilege and my honor. I thank the organizers from the bottom of my heart for giving me this opportunity. While I was preparing the slides for the presentation today, I don't know, somehow when I selected the templates from the Microsoft Office suite of PowerPoint templates, the one that struck me was the one with the photograph of giraffe, and I hope it is visible to you all. And and planning is nothing but all about, you know, anticipating, having the longer sight and the line of sight very clearly, so that, you know, you are able to plan your audit matters in such a way that one is internal audit is little bit adversarial and you tend to develop frictions, and planning is a great tool by, you know, ensuring a good effective plan that you have discussed well, you have communicated well with the auditees. There are no surprises, and you are able to then take them through the entire audit effort very, very effectively. So moving to the entire framework of SIA. So you would be aware now that SIAs have undergone a change since last 15-20 years, when they were originally came into being by the Council of the Institute. Number of SIAs have undergone modifications. So this is a brief snapshot table which shows that which SIA has undergone a change, modification, where there is no change. So the SIAs on planning have undergone a change, certainly. There are two SIAs, 220 and 310, and both these SIAs have got alignment with international global best practices now. And the erstwhile SIA 1 and SIA 15 on planning and knowledge of business have been superseded by 220, conducting overall internal audit planning, which is a SIA for entity level internal audit planning, and 310 is planning the internal audit assignment, which is a subset of 220. So these are the two SIAs that are currently in vogue, which internal auditors must follow. These apply to practicing chartered accountants who are audit partners, as well as to chief audit executives who are primarily responsible for designing and implementing an audit plan, audit reporting, and the overall audit strategy. So irrespective of the fact that whether you are practicing professional partner of a firm, this would apply to you as well as to the chief audit executive, and it's a requirement under the Companies Act as well. The benefit of adhering to these best practice documents is that you have the entire body of knowledge as far as internal audit is concerned, compressed into these beautiful internal auditing standards, which talk about the code of ethics, talk about the definition of internal audit, talk about the planning framework, the execution framework, managing the internal audit function, and so forth. So let's deep dive into these two standards, 220 and 310, quickly. Now, these standards have a background to them, that before the internal auditor actually embarks on creating and documenting the internal audit plan, what are the significant areas that he or she must look at? So the background to these standards articulate the following bullets that are there on the slide, the key planning considerations. I've added a couple of bullets more from a practicality. The first and foremost is the significant changes in the business environment. So has the internal auditor scanned what is happening in the client entity or what is happening in the organization before creation of the business plan, in terms of doing a preliminary assessment of the business environment? What are the challenges? What are the constraints? What are the technology changes? How the ERP has changed? How the technology platforms have changed and adapted to the work from home kind of an environment? What are the new additions in terms of collaborative tools? The internal auditor should also review the movement in internal controls in terms of additions, modifications, deletions, should do a movement in the financials of the entity to see what are the delta changes in the financial statements of the company from the previous audit period, should focus on the key regulatory changes in the environment, and do an annual exchange of views with external auditors, with the IFC ICOFR team, with the IT auditors, to understand the changes that are happening in the environment, in the technology landscape, to make notes, to present a point of view from the internal audit team, to see what are the deficiencies noted by the other set of auditors, etc., and have a healthy exchange at the beginning of the year. The standards do require that whenever an internal audit plan is created, it has to be created in advance. It cannot be a case where the internal audit planning is done in the month of April and May while the new calendar is already in action. So sometime, say January or February would be a good time to do the internal audit planning exercise and present it to the audit committee and to the board of directors, seek their approval, do the changes that are necessary, and then implement the entire execution of the internal audit plan. The standards do require a mandatory independent risk assessment exercise that needs to be documented by the CAE or by the audit partner, as may be the case, which may also include fraud risk assessment. Team and individuals, part of the team members, including the outsourced or co-sourced service providers, external service providers, need to conform to the standards of ethics as well as the standards on internal audit that they have read, they have understood, and if there are any conflicts, suitable disclosures are made in the audit output. And it's very important that at the stage of planning itself, the independence check, objectivity check, etc., is carried out so that there are no surprises at a later stage. In today's business environment, this becomes very important even from a practical perspective, because there is a lot of movement of people that is happening, and you do have resources that come into the internal audit function, say from the procurement function, from any other function, and then typically they may get conflicted. The entire audit strategy has undergone a change, which is a key planning consideration in terms of the C-19 pandemic, to see what are the type of on-site and off-site roles the internal audit team members would play in the current pandemic environment. And more so now as things are opening up, what are the key focus areas? Because in the last 1.5 years, most of the internal audit teams would not have done a physical verification of inventory, asset, or cash. So any vulnerable accounts that have not been physically verified in the last 1.5 years would be a key planning consideration in terms of a rollback review from the internal audit team side. The chart on the right hand side just shows you the number of changes that the internal audit teams make to their internal audit plans, and one of the telling statistics is that around 36% of times businesses and audit teams require multiple changes to the audit plans during the course of the year. This is a brief snapshot of the SIA. The SIA 220, which is the master standard on conducting overall internal audit planning, and the subset of the substandard is 310, which is on the slides later on. So the 220 standard basically dovetails the overall requirement of the Companies Act, where the audit committee of the company or the board shall, in consultation with the internal auditor, formulate the scope, functioning, periodicity, and methodology for conducting the internal audit exercise. This is the overall standard which says that the internal audit exercise the planning should be documented, should be well discussed and communicated with the various stakeholders to avoid any kind of surprises. The key elements in this standard talk about alignment to the objectives and risks of the organization, knowledge of the client business, internal audit charter, review of the audit universe, and planning for the right skill sets to execute the internal audit assignment. Key highlights from the standard are that the internal audit plan should be a written document. It should be reviewed and approved by the highest governing body of the organization. Here is a chance and opportunity for the internal audit team to exchange views with the board, to present their point of view on the internal audit plan, on their budgets, on their constraints, and seek approval or not from the audit committee through a constructive discussion. Internal auditors should discover the audit universe. Audit universe may comprise of all the auditable entities, such as it could be products, processes, functions, it could be business units, geographical units, it could be migration of ERP, it could be a business plan, it could be any future activity as well. So it comprises of all physical and logical characteristics that could be audited by an internal auditor. The internal auditor should discover the universe in consultation with the management. He can use technology also. There is a slide here which I will demonstrate that you could create a data snapshot from the general ledgers or trial balances while you're doing your audit planning to capture the key values and focus areas. And once you have captured the universe, from there you can then plan, and from plan you can move to sampling using the same base. It necessarily has to be a risk-based planning exercise. So the internal auditor has to imagine and anticipate the risk factors by studying the historical risk and control matrices, as well as imagining what are the new risks and doing a consultative discussion with the management team to identify new areas of risks. Look at what is happening in the industry, and should look at continuously monitoring and improving the internal audit plan, because it is something which is dynamic and it cannot be iron casted or a rigid plan. These are some more features in terms of what the standards say. In terms of obtaining knowledge of the business, the internal auditor has to rely on the previous experience of either previous auditors, previous reports, develop an audit memorandum, look at what are the applicable laws and regulations, have a healthy discussion with senior management, including the audit committee, establish the audit universe in terms of the various auditable units and entities within the company. Define the audit objectives. Normally, the classical audit objectives would revolve around compliance, reliability of financial reporting. It could be around cost management. It could be around efficiency of operations and so forth. So strategic objectives for the entity as aligned to the internal audit goals and plans, identification of key risk and controls areas at the planning stage, and then risk rating them. These are some more areas in terms of defining the scope of work very clearly in the engagement letter and the audit plan, including the audit criteria, selecting the right competencies and skill sets that would apply to various aspects of the internal audit exercise, various components, especially in case of cyber security or treasury audits or any other highly specialized areas, what kind of competency needs to be taken on board while you are executing the entire assignment needs to be reviewed at the planning stage, and approval sought in terms of hiring those specific skill sets, and then preparing the overall internal audit program or work schedule supporting the plan. Now, this is a brief snapshot of the various subcomponents of the planning exercise. Taken an example from IT component area or information technology as a process team. So there is a understanding basket that what are the various technology components within the organizational profile. It could be e-commerce, it could be ERP, it could be digital transformation, it could be network security. After having understood the entire business universe, then define the specific IT universe items to be verified and reviewed in terms of applications, etc. Perform a risk assessment, and basis the risk assessment, formalize the audit plan. Now, this is an example of a risk grading matrix. On the left-hand side, you see consequence definition, then you see the actual risk factors, and then the likelihood definition. So depending on the scale and the risk grading criteria and the organizational philosophy, the internal auditor at the beginning of the planning exercise itself should work out a risk grading matrix with the auditees, and also take approval from the audit committee in terms of various risk factors that would get into the risk ranking exercise. And the diagram next to the risk grading matrix is capturing the universe. So generally, while you are capturing the universe, you could do a data story and you could do a high-level flow chart. And when you do a high-level flow chart, it gives that ease of reference to the audit team members to capture it appropriately, and what are the components on which risk assessment would be undertaken. This is again a waterfall of the audit plan, a risk assessed audit plan where you have areas, you have financial impact, you have quality of controls, you have the transformation or changes in the audit unit within the universe, and the key risk areas. So in case of technology, it could be availability, integrity, confidentiality, and then finally the score and level of risk. So this is something that the internal auditor should look at preparing at the beginning of the year as an independent risk assessment exercise, and tabulate the various scores that are risk weighed and rated, and present it to the management, have a consultation with them, and seek their approval, and develop a consensus on the entire risk assessment sheet at the beginning of the exercise. And this will be a great tool to also create a consensus on the entire audit exercise, have the buy-in from the management to give them an outlook of what are the high risk areas, what are the moderate risk areas, and what are the low risk areas, and then compare this with the residual risk sheets on completion of the internal audit exercise. Now let's look at the subset of the overall internal audit engagement planning at the entity level. Standard 310 focuses on planning the internal audit assignment. So this is a subset. It's for a particular audit mission, audit project, or you can say a quarterly internal audit which has got two or three themes where the internal auditor has to plan typically and do. So this is at a more minute level in the form of an audit work program, I would say, and 220 was at an entity level, it was more strategic, and the 310 talks about detailing it further in terms of the scope items, the criteria for audit, detailing out the auditable unit, and also assigning the suitable resources. So this is very specific to a particular audit mission. Here, the internal auditor should clearly document the scope of work before he begins the audit mission on a quarter or on a monthly basis. Ideally, the documented scope should be run past the audit sponsor, the various auditees and stakeholders, and the internal auditor should define audit criteria and the scope criteria in terms of what is the areas to be covered. The areas to be covered could have geographical dimensions, could have dimensions beyond the office boundaries of the corporate. Say, for example, if the internal audit item to be covered, one of the scope items is payroll process, which goes beyond the boundaries. It could be an outsourced item as well. So all those considerations should be well documented. If there are any information, organizational record access constraints should be documented in the audit criteria or the scoping sheet itself. What are the international literature like ISO 27001 or ISO 9000, any other standards, technical literature to be referred to by the audit team should come in the scoping and planning sheet very clearly, so that there is an established criteria and a benchmark established against which the audit exercise will be undertaken, and the objectives and the scope performance can be evaluated at the end of the exercise. So at the planning stage, looking at all these things is very, very important for the internal audit team. Now, the 310 talks about the audit methodology. Internal auditors, while they are doing the planning and the risk assessment, they have to have a very clear line of thought in terms of what the audit methodology, what are the work sequential steps that they are going to follow, what is the audit calendar, what is the specific test of controls that need to be carried out, audit checklist or risk assessment and control evaluation checklist, fraud risk assessment, or it could be an internal control questionnaire, then a information tracking sheet in terms of requesting and obtaining information and receiving from stakeholders along with responsibility and timelines, the analytical procedures to be followed, executed by the internal auditor, and most often in these situations where you run a CAT tool or you run an audit tool, you need to acquire a lot of data, or you need to have access to a lot of databases of the clients. In such a situation, the auditor has to plan in advance, cannot give a surprise to the auditees at 11th hour saying that we need to analyze this data, and for which we need access to their systems or databases. So at the planning stage itself, if there is any system tool that needs to be deployed, the auditor needs to give an advance notice notification to the auditees in terms of what are the sampling plans to be used by the auditors, has to be documented and communicated well in advance. And of course, there has to be a rolling and ongoing review, which has to be done. As I mentioned earlier on, the audit planning responsibility rests with the head of audit as well as the engagement partner, and needs to be approved by the audit committee. Now, this is one small example of discovering the data universe. So you take a trial balance, you take a ledger dump, and you have so many different utilities available in audit tools to just summarize the entire universe of transactions for the entire year into a small summary of what are the topmost items in terms of value, in terms of count, bottom items, average values, missing sequences, unusual flags around transactions on holidays, missing serial numbers, duplicate entries, etc. And you can summarize and stratify in a very beautiful manner along with a dashboard at the beginning of the year itself, so that there is so much of focus on the data universe while you take up a particular audit theme, and then you are able to pinpoint and focus in a particular manner while you are sampling the data and you are executing. So while you discover the entire audit universe through discussions, it is very much advisable that we also do a data analytics in terms of discovering the data stories. Now, this is one final example in terms of your overall audit risk-based audit plan, where you have various audit thematics or themes which could be arranged on a quarterly basis, monthly basis, half-yearly basis, and you should assign the risk level as was shown in the previous slides, along with the frequency and the allocated mandates to each of the cycle and each of the audit themes. So you have a handle on the total overall estimate of the number of mandates to be committed to the audit plan and by which resource, and what are the levels of skills and competencies in a summarized manner. And ideally, this kind of a dashboard could be submitted for approval. Now, when we look at the entire internal audit planning exercise, we have to be very careful, because this is setting the right direction, and really the nature, the depth, and the quality of the audit plan will determine the audit output. So you need to take a choice whether your audit plan is going to be an elephant, it's going to be a shark focused on suspecting frauds at various stages of audits. It's going to be a whale which will find itself very difficult to sustain over a period of time, or it's going to be a unicorn horse. So if you keep these examples in front of your eyes while you review the audit plan, you will immediately realize how agile, how flexible your audit plan is, and you can do a critique on that, and you can then finalize it for communication and adoption. Rowing harder doesn't help if the boat is headed in the wrong direction, isn't it? If your planning is ineffective, you will find it very difficult to complete your audit efforts in a timely manner and in an effective manner. So if your audit plan is not done carefully and you've not spent sufficient time in planning, you'll end up working on the hard side without getting optimum output and results. Last few slides. Contemporary audit planning landscape has undergone a change. As we heard in the first opening remarks itself, business is evolving every day, technology is changing every hour, consumer choices and preferences are changing every minute. Can we afford to have an internal audit plan for 1 year and sleep over it while we execute? And we see in the next quarter that the world has changed. I don't think so. That's the idea pronounced by the standards as well. Although the standards mention that ideally you should have a 1 year internal audit plan. However, they give a lot of flexibility for the internal auditors to create a master plan and then have an agile approach in terms of adopting various themes and doing snap audits within them to give assurance to the board and to the audit committees. So the best thing is to make a risk assessed plan, which is a rolling plan, a flexible one, which enough of flexibility built in, cushion built in, so that you are able to take up ad hoc work and new demands coming around from the CEO, CFO's office, or from the audit committee and board of directors. By failing to prepare, you are preparing to fail. And I would just end my slideshow by saying that audit plan ensures success, compliance, and credibility, and your future as an auditor is at stake depending on the quality of your audit plan. So if your planning is not effective, you'll end up doing a half-hearted or an unacceptable job. With that, I conclude my presentation. Thank you so much for the patient hearing.
Thank you, sir. Thank you thank you for this marathon session. I think so much stuff for all of us to learn. I think very, very well made slides. Thank you for creating this. May I now request the past chairperson of Pune branch, my colleague today as a coordinator, Sri Ruta Chitle madam, to please give a well-deserved word of thanks for this session.
Thank you, Arpit, for giving me this opportunity. And Huzeifa sir, you were so lucid in explaining the importance of audit plan and the SIs, especially 220 and 310. I also like the internal planning, the plan which you had suggested, especially the estimated working hours, because this really puts a perspective on the priority of what all things should be, given. So thank you so much for being with us today and explaining us so very nicely. Thank you, sir.
Thank you. My pleasure. My pleasure.
Thank you, Huzeifa, sir. Glad
you.
to see you after a long time.
Yeah. Same here.
Moving on
Pleasure.
next. Yes.
Thank you.
Moving on next, we've got a fantastic session on preparation of risk-based internal audit plan by CAE, and we have again a very tall personality, academician Buddhadeb Samanta ji with us. May I request Ruta Chitle madam to please introduce the faculty and set up the stage so that he can take us through this risk-based planning. Over to you, Ruta madam.
Today we have with us Buddhadeb Samanta, sir. He will be speaking to us on preparation of risk-based internal audit plan by CAE. It is really a great pleasure to introduce him. I was really spellbound by the amount of experience he has. Let me explain it to all the participants. He has 20 years plus global telecom experience in India, Middle East, that is Dubai, Bahrain, and Southeast Asia, Indonesia, that is. Proven track record of setting up, scaling up, and heading internal audit functions in sync with organizations' business and regulatory requirements. He has also demonstrated excellence across the areas of strategic planning, business controls, internal audit, fraud management, revenue assurance, risk management, and really many areas, especially corporate governance and team management. Worked primarily in the telecom domain, led and managed multicultural cross-functional teams. I think there could not have been any better faculty for us today to talk to us on preparation of this. Thank you so much, sir, for being with us.
Thank you, madam. Over to you, sir.
Thank you so much for this lovely introduction, and thank you WIC coordinators for giving me this opportunity to be part of a speaker in today's panel. I would like to speak in a very different way today, like mostly from my, can you see the, first of all, can you see the screen?
Yes, sir, we can.
Okay, that's great. So I would like to speak about the risk-based internal audit plan, not mostly from the theoretical perspective, which has already been taken care in by my previous speaker, but I would love to share some of my experiences that I have gathered in the last 20 years in having the privilege to work in 4 or 5 countries altogether. And last 6 years I have been employed as a mostly in the CIA position in the two companies like Smartfren and Batelco, and of course I worked in the director position in the Do Telecom. So definitely I felt that it will be more beneficial that if I can share some of the experiences, and I would love to hear some questions that you have in the future when I'm going to take the session. Just to give you a brief, that my industry only involves the mostly, right, I would say 90% of my experience is mostly in the telecom industry, and I have seen a series of changes in the technical side from 3G to 5G, and currently we are in the deployment of the technology in the industry. So based on these experiences that I've gathered through these technical changes, I will try to develop a more or less a risk-based audit plan, how to develop it and how to manage these challenges during the course of preparation of an internal audit plan. So these are the 7 topics that I would discuss today. What is a risk-based internal audit plan? What are the emerging risks in 2021? How I managed to get a gathering of these risks before I started planning. Factors that should be considered as the inputs while we plan for an internal audit, and then how to prepare the plan, what are the tools that are needed to execute the plan, challenges faced and how to overcome them, and the emerging technology and gearing for the future. So let me start with the very word that risk-based internal audit plan. What does it mean? It's like not something like a simple document or just like a paper, but it's like a methodology that links the internal audits for an organization with the overall risk management framework. We are actually linked. We are not a silo department, and it has to be linked with the second line of defense, the risk management, as well as the primary controls that are being established by the first layer of defense. So why we need this internal audit plan? What is the purpose? So basically, there are 4 major areas where responsible for the emerging risk in before the pre-COVID era also, that are leading to disruption, which involves technology, globalization, demography, and environment. For years, the term disruption was only used as a business plan for developing the business plans, and we used to take these things into consideration while preparing an internal audit plan. But recently, in recent time, we are experiencing, can't say anymore, it's recent time, it's almost 2 years now, we are experiencing an unprecedented global disruption, COVID-19. So this kind of a disruption is like where you cannot hedge your risk with other countries or other business. It's global. Like some of the industries like travel, tourism, airline, they're just trying to survive in this market. It's a very sad situation that's going on currently. So we are actually left with very limited resource to conduct our internal audit. Today we are being perceived as a cost center. So it is of utmost importance that we develop a comprehensive risk-based plan with the limited resource that we have, and then we produce an insightful, proactive, and future-focused assurance and advice on the organization's most pressing issues. What does this mean? It means that the pain points of the organization needs to be addressed through our audits. Internal audit is not about showing how well I am equipped with a technical area or how well I know about this particular domain, but it's all about helping the organization in achieving its objective. So the plan definitely needs to have this feature inbuilt. Hence, we need to innovate new ways of working and more complex type of audits that with different approach, competence, and enablers with stakeholders buy-in. Key thing over here is, I repeat, stakeholder buying. Without stakeholder buying, all our efforts will not be counted for. Whom we actually address these risks? For whom? What is the purpose of these audits? What is the purpose for internal audit? What would have happened if we would have not been there? So basically, internal audit allows or it helps give an assurance or provide an assurance to the audit committee, the board, about the risk management processes, whether they are being managed effectively and efficiently in relation to the risk appetite to achieve the objectives of the organization. So this gives them an assurance, and it is our responsibility that all our audits should be based on the assessment of the risks. It's not something based on our ad hoc thought process. So before actually I started doing the internal audit plan for the year 2021, what did I looked into? So then I started looking into this is the so-called, irrespective of any organization, when you are going to start an internal audit planning, you have to understand the market, you have to understand the strategic risks, the financial risk, the compliance risk, and the operational risk in the overall world market. What are the things that we understood over there? There are geopolitical issues that are coming up, depending on the region or the location where you are working. Then there is also within the country, there can be geopolitical issues. So we need to understand all of them. Then the climate change that are happening, the cybersecurity threats that are emerging, cybersecurity threats that are happening in the market. The poor management of the stakeholders' expectation, and of course, not last but the least, is the technology which can disrupt any business within a day. So, for example, if you remember, when we were using last, let's say around 10 years before or so, or 9 years before, SMS and voice calls were one of the key revenues of telecom sector. Today, almost negligible. Why? Because there is a disrupting technology came up, that is WhatsApp or other VoIP applications where you can make calls, where you can share presentation, where you can do chatting, anything. So, and you can basically, you are not able to monetize also, but you have to give the service. So you can imagine how disruptive a technology can be, and we lost a lot of market share and revenue for this. Then comes, we have to understand the financial angle also, like business resilience, cash flow, and the bad debts that are mounting up because of the COVID situation. CapEx and rate of investments, where we should be investing, we should be investing in a diligent way, not like where are the risky areas where the CapEx are invested and there may not be any rate of return for that. Changing market structures, capital allocation to drive the value creation. So these are the areas that I first understood what exactly can be the risk in my existing organization. Then, of course, the compliance. Nowadays, compliance is not just an area to be audited, but it's like a real importance. And some parts of the world, this particular certain things like data protection, data privacy, regulatory requirements, IT governance, these are so important that you cannot even implement some of the so-called global technology on those countries. Why? Because they, even if you implement it global on a central hub operating from the location where you're working, the country or the destination country will not allow you to share that data to you. So some of the countries will not allow you to work even using the the teams or the data through the data sharing process. I won't mention the name of those countries now, but definitely there are some of the locations where you face these kind of difficulties in terms of doing the work because of data protection and some of the applicable laws. And these laws are so stringent that if you violate them, then there will be a situation where they can even we have to stop the business also. So because we are dealing with customer data, so that is very, very critical and crucial for us. We have to understand this area when we are developing an audit plan. Then comes the operational area. Of course, apart from the routine ones, we need to assess of all the operational areas, like what are the emerging risks related to operational area for 2021. So over here, like, of course, there is a, because of COVID, we are all working from home and it's very stressful. The people, especially I've seen the working women who are have to handle the family as well as the, they have to manage their work also at the same time. So obviously it's a very challenging factor for all of them. And so that is why staff well-being should be considered as one of the key factors so that we do not lose on them. The fraud exploitations have increased because of increased use of VPN and all this stuff. So we need to understand where those potential areas of fraud are because of the emerging situation. Supply chain management, data management, digitalization, automation, all these areas are good. At the same time, we also have to assess the corresponding risks within the organization for whom we are actually doing the audit planning. What are the inputs that we need for doing an internal audit plan? We have to understand the strategy of the organization, where it is heading to. We have to have an audit universe already in place if it's not there. We have to have the process for all the organization in a, according to the different organization structure. We have to understand what are the key process within the organization, which are the key risky ones. Then we have to assess the risk register. The key important part of the risk register is like we need to understand how frequently the risk register is actually updated. Is it just for the sake of keeping a risk register, or is actually really of some use, some value? Fraud risk register is not something, this is the same mechanism also needs to be applied over here in the fraud risk register. We need to understand what are the frauds that are potential frauds or areas that have, whether it has been assessed in recent time or not. Is it being updated on a regular basis? If yes, what frequency? These things are very critical. Then we need to understand the past audit objectives or the observations that we have gone through those audit assignments that we have done in the past. We need to, after that, the most important thing is to get the management inputs. We need to understand, are we heading to the right direction? So it's only after a discussion with the management we can understand whether the ship is sailing in the right direction or not. If not, then we need to change or we need to strategize our audit plan in that direction, towards the direction which the company wants, not something which is different from the direction of the company. Last but not the least is the statutory auditors inputs also. They also know the business from another angle. So two things are needed over here. One is to avoid duplication and to get their feedback as to what are the risky areas where we should focus in. The tone at the top, of course, can be given only by your audit committee members, and they can help you in generating an effective audit plan for this, for the purpose of achieving the objectives. Now I will take you through how the risk-based internal audit plan is actually prepared. So first and foremost thing is understanding and assess the strategy of the organization. The strategy of the organization is something you will see when we actually develop a plan. Most of the cases there is a little bit hindrance, or the management is not so cooperative in sharing the strategy with an internal auditor. That's where your negotiation skills and the relationship with the management comes into picture. So if they value you, if they really value the inputs of an internal auditor, then definitely it is something that is they will share with you. They will give you the full visibility of the strategy, and after getting that, only you will be in a position to assess or do prepare a risk-based internal audit plan. Without this, nothing we can do. Then we have to understand the organization structure, the current one as well as the future organization structure that is proposed during the whole upcoming year based on the strategy of the roadmap of the organization. Why this is important? Because we need to factor in during the audit plan the future, not only the past or what is happening or what is existing at this stage. How we are going to understand what are the major functions or the major activities that are being carried out under the different organization structure. Then we have to look into the key processes and the applicable risks in those processes. So we need to understand the major processes, the key stakeholders in the processes. We need to have a discussion with them, and this discussion with the stakeholders or the process owners, it's not necessarily the senior management team, but it will be with the key persons, so-called the level 3 of an organization, where you can have a discussion with them very openly, and they will give you the guidance as to which are the key things to be looked into the different areas. We also need to, we cannot forget the past. We have to learn from the mistakes, and we have to understand what are the things that went wrong in the past by assessing or scrutinizing the audit reports or action plans that were defined in the past by the management. And we also need to understand what are the activities that are being carried out by the second line of defense. Second line of defense, for example, risk management team, or there is in telecom industry, there is a function called revenue assurance. So revenue assurance is also considered to be one of the key second line of defense. So we have to collaborate with them. Why this collaboration is needed? Because as I told you, that we have limited resources. We cannot afford to do we cannot afford to cover each and every risk. So we may rely on some of the work that is being carried out by the second line of defense. So we need to assess their observation. We need to understand the area of concern, and this one needs to be taken as part of our planning process. Next comes the most important thing, that is the ERM register. I hope that all organizations will have it. Although in my experience, I have seen or have come across the ERM register is not there. I will come to that later, what we should assess in case the ERM register is not there. I'm presuming the organizations will have the ERM register or the enterprise risk management register, where we will assess the methodology, the frequency of updation of the register, and what are whether it is already approved, the way of assessment of the risk management framework is actually approved by the board or not, and whether it is in agreement with the management and the board, that what will be the methodology. This is very critical, because it's not something for the sake of paper, but it is something for actual output which we can use for the purpose of our risk-based plan. If you feel that this register is not something which can be improved further, we need to discuss that immediately with the management, and we need to take action for that. Fraud risk register also is something that we need to understand whether the company has a separate focus on assessing areas of potential fraud, and how frequently they are updating those areas that are potential for the fraud. All said and done, once you complete this assessment, we need to go and now talk with the senior management team or the TMT members, the so-called top management team, which basically involves the CXO meeting. What we actually do over there, we basically discuss what are the so-called risks perceived by them. And I would love to mention over here that a word of caution, that let's not try to drive our idea into them. Rather, it is important that they come up to us with their ideas or what they feel is important. I have been to meeting with some of these TMT meetings. Continuously I'm going there, but in the past I've seen that some of the CAEs or the head of internal audit, when they go for this TMT meeting, they try to speak more than allowing the TMT or SMT members to speak. So it is very critical that we should be, allowing the TMT members to narrate their ideas, to guide us, and we should be the listeners in those meetings. We should schedule these meetings on a priority and assess the emerging risk along with the market risk. So when after they speak, they finish, then we should immediately, as I told you earlier, that we already have something within our mind, what are the emerging risks in the market. So immediately we need to map based on the conversation that or the feedback given by the TMT and SMT members, that whether those risks are already being captured in his mind or not. Then with their permission, you can just share your ideas or views that what he thinks about these emerging market risks in his area. If it is genuine and if it is really something worth it, I am sure he will buy your idea, and then definitely it becomes one of the key inputs for the audit planning mechanism. Next comes the AC meetings, that is the audit committee meetings, where we need to schedule the meetings and take it into consideration the tone at the top. It is important what the organization is thinking, what the AC is thinking, how they want us to approach in an internal audit, what is their vision. So mission, vision, and the culture that they want to set in is something that we need to understand by having a discussion or an important meeting with these AC members. It has to be an individual meeting. I don't mean AC meeting means like normal, like organizing a 4-member AC team all together and doing a formal meeting. No, we have to meet all the AC members in a personal level on a one-to-one basis, and then we need to discuss our ideas. We need to take their feedback, and then we come up to a common conclusion as to what is we have to assess after that, after meeting all the members, that what is the tone at the top, which direction they want us to move. Then the audit universe, which I believe is already in place, we need to update that audit universe and prepare with the inputs received so far. We need to update it according to the so-called strategy of the organization, organization structure, process, everything, whatever I discussed till now. Those things needs to be taken into consideration while preparing or revising the audit universe. And we also need to incorporate our own assessment of the risk rating based on the likelihood and impact of the individual areas that we have already mentioned in the audit universe. We need to prepare a heat map based on the frequency and also the likelihood and the impact of the individual events. And this heat map will generate some sort of like a table or a sort of a map where we can understand very easily which are the areas to be focused and what frequency we will be doing these audits, depending on the ratings that are generated by the heat map. These ratings or the heat map ratings should already be discussed and agreed at the beginning of the year only with the audit committee members, so that there is a structured plan, and the management team also should be aware of that. It's not something we should be working on a silo. So this heat map should also help us to prepare the strategic audit plan for the coming 3 years. In that 3-year plan, we also have to have what are the audits that we have done in the past 2 years, and we will propose to focus more on the areas that we have not covered and which are of high risk in nature. Again, I repeat, we have limited resources. In today's world, actually, audit universe and the strategic audit plan or the heat map generation is usually done through systems, and I will share with you one software which actually takes this thing into consideration. Then comes the last part, that is the final audit plan, the so-called draft internal audit plan with a 4-quarter on a quarter-wise, what we propose to do. And before even we approach with this audit plan to the audit committee, we must and we should have a discussion with the TMT and the CEO. We must get their blessing, and then we approve, or then we get it approved by the audit committee. In this way, if we approach, then there will be no surprises. In the audit committee meeting, there will be no debates. It will be a smooth flowing process, and we will achieve our objectives. Last but not the least, as you can see from the picture, that audit plan is like a diaper of a baby, so we need to change the diaper as and when it's needed. So similarly is the risk-based audit plan, where we need to continuously, evolve the internal audit plan. It doesn't mean this word final audit plan is actually a misleading one. There's nothing called final. You can finalize the plan today, get it approved by the audit committee, and tomorrow something happens which will force you to change the audit plan again. So it is something, a real-time thing. I would suggest that yes, we need to produce our internal audit plan as per the statute or as per the requirements, but in order to be effective, you need to take the veto power from the internal audit department, or rather audit committee, that as and when needed, as a CAE, I can change the audit plan based on the risks or the emerging risks. We can incorporate that, and then we can either get the approval of the audit committee through circulation or in the next audit committee meeting. But we should not be waiting for the, changing the audit plan till the next audit committee meeting is there. We should do it as and when needed. This is the key message. What are the tools that we need for the purpose of execution of this audit plan? So it's a very good to have a good audit plan, fantastic. But after that, what are we going to do? So what are the other things that we need to take into consideration? So the critical, most important thing is the manpower. We need to assess the team members in our team as to what are the skill sets that they have, how many available days are available from the team members. Like we need to take into consideration the holidays, the leaves, they will also need to understand when they plan to take leaves and all. So based on that, we need to allocate the number of days against the audit plan. That's okay, that's natural, normal. But apart from that, there are some audits where we understand that we cannot do the audit in-house. So in that case, we need the help of outsource or the co-source persons or the external firms, where we need the external support in terms of the skill sets. The excess of the total budgeted hours and actual hours available within the team sometimes also leads to co-sourcing. So outsource and co-source, we have to assess as CAE that what are the activities that we want to outsource and what are the activities that we want to co-source. Co-source is basically supporting the internal audit department with the manpower, and then we along with the skill sets. But outsourcing is something like where we do not have the skill set and we really need the help of third party to do this as activity for us. So this is something we need to be practical, and we need to assess, and we need to budget it and get it approved by the audit committee. In addition to that, we also have to focus on the projects that we want to do during the course of the year. Remember, as I told you, that the department's resources are going to be less and less. This is perceived as a cost, as a cost center. So we have to deploy technical expertise and technical projects for a lean and technically equipped IA department. And what are they? For example, GRC software or data analytics software. These are the new upcoming things that are coming up, and we need to gear up for these things in our internal department. If we continue only doing audits in an old-fashioned way, and we do not gear up ourselves for these areas, then we will become like a dinosaur in another 1 year or 2 years down the line. Some companies in the world have already gone ahead and they have already deployed this. So it's high time that we need to focus on these areas. And it's not like, okay, we will do it at a later stage. No, we have to do it now. It is important. We have to accept this, and we have to move forward doing like this. On top of that, the last but most important thing is we need to assess the total budget requirement for the IA department, and we need to discuss with the management first to align. Very critical, your relationship with the CEO. Although we say that we are an independent function, based on my experience, I feel that yes, I keep my independence, but it's not like I work in silo. I can never be successful if I work in silo and only approach the audit committee for my requirement. So it's not the way it works. So you have to have a very close relationship with your chief executive officer. You need to align with him. You need to make him understand why we need this budget. We need to get his buy-in. If he is not willing to, share the budget to some extent where we need to make some compromises, it's okay to do that rather than to land up in a fight. But of course, it is not at the compromise of some important area or some, where it is like you are losing out or some, we are actually going to and land up in a risk. I'm not saying that, but what I'm trying to mention is that we need to understand or make him understand we need to build up a strong relation, a strong bond, and he is the person who will support us in the audit committee, saying that yes, the internal department needs this budget and we are aligned with them, and audit committee will just go ahead and approve it. It's going to be a cakewalk for us. So these are some of the methods or some of the things that we need to take into consideration while we are preparing an internal audit plan. It's not only the internal audit plan, but how we are going to execute the plan. For that reason, whatever tools are needed, whether we have the approval or not, we also need to understand and work hand in hand. What are the challenges faced and ways to overcome the certain areas during my journey? And that's what I mentioned here. That while doing the risk assessment, I suddenly see there's no risk assessment register, nothing. So what to do in that case? So the only way what we can do is that we understand the major risk through the discussion process, through the reports, through the various projects that were undertaken earlier. We understand the business and the current state of affairs through the financial statements and the trial balance analysis and cash flows and all these things that becomes very critical in that during that time in order to plan the audit for the upcoming year. And of course, we need to educate the management that it is important that they develop a risk register and we work together with the management to develop the risk register. We will maintain our independence. I would again say that any value addition that the management needs from us, we should not hesitate just by saying that we are independent guys. We don't want to involve ourselves in operation. True, we will not involve ourselves in operation, but at the same time, we must give them some suggestion, or we must we must suggest certain items for to make them understand that we are a value-added department, but not just coming and asking and finding out faults. The other thing I would like to mention that don't start the audit plan at the last minute, which is important that we need to understand the planning process should be continuing throughout the year. It's not like it's something like we should wait or we should start at a certain point in time. It's like keep updating or understanding and making your own notes throughout the year for the audit plan next year. Send meeting requests to the top management and the AC members at least 15 days or even 1 month prior to their, the actual date of the meeting. Why these are very important? Because your audit committee date is nearing, and then suddenly you find that you have not managed to meet everybody, and then you land up in projecting something to the audit committee without proper discussion with all the stakeholders. This is going to be a mess. It can land up in a mess. So my suggestion is that better we actually meet the TMT members or the AC members and give them a prior notice for this. The time from TMT member and when we are actually meeting with them, it is, as I mentioned earlier, that the relationship development is critical. Listen to them before you speak. We shouldn't try to show our knowledge base to them during that time of conversation. It can be disaster. Then try to build a technical knowledge and negotiation skills by reading the books or going through your day-to-day experience. It doesn't matter even if we make some mistake during the conversation with some of the senior members, but we must learn from that mistake, and we should make sure that we don't make them repeat the same mistake in the next meeting. The budget approval. As I told you, we need to discuss with the CFO and CEO. By the way, I mentioned the name of the CFO here because although it's not written in any of the standards, but yes, this is very critical. He is a key stakeholder in our organization. In any organization, till now, wherever I've worked, CFO is one of the key stakeholders, and the CEO sometimes depends on him. Budgets and all are being approved by although the CEO and sent to the board for approval, but still the CFO actually is the the decision maker, the key decision maker in one of the key decision maker in the whole process. So you need to align with the CEO and CFO. Align your plan with them. Avoid surprises in the AC meeting. make sure an approved decision is minuted in the AC. It is also very important after all these efforts that we took. Suddenly, after the audit committee meeting is over, and after 1 month of the audit committee is over, suddenly somebody says, "Who approved this?" Then the question is that, okay, where is the approval? So when we go back to the minutes, we actually don't see much of a like approved by the audit committee this particular budget or approved by the audit committee this plan. Those things are not written. It's very important that we minute these decisions in the minutes of meeting. And of course, the last challenging part I would say is the ad hoc projects, which is a challenger by itself. So you have a lovely plan, you have a budget, you have resources, you have planned nicely, and suddenly some additional exercises or ad hoc projects are come up, to where you have to do those, projects at the request of the management or the request of the audit committee. This is definitely a big challenge. So then it disrupts the whole plan. Whatever you thought, it's actually, you will try to figure out whether any of the existing audits are covering their request or not. If not, then we really need to change the plan immediately. And if required, we need to get some additional budget approval with immediate effect. I would suggest to tackle this problem, create a vertical of forensic audit, the continuous control monitoring and special projects. This vertical will take care of all the ad hoc needs, and it will not disturb the internal audit plan for the whole year. And take help of co-sourcing and outsourcing during this ad hoc project time wherever needed, along with one of the resources in-house. Last but not the least, as I was mentioning, that emerging technology for the future, we need to embrace them. We need to understand what are the innovations that are happening in the field of internal audit. Bots, artificial intelligence, blockchain mechanism, data analytics is no more something dream, but it is actually happening in reality. In Dubai, one of the contracts, basically, I can talk about the registration deeds of the houses are all under the blockchain. So it's just like a piece of paper where every time, whatever transactions are going to happen, they will get a fresh paper. And these are all being stored in the blockchain. So these emerging technologies needs to be embraced, and we need to, this GRC, this diagram is actually showing that how governance, risk and compliance are going to work along with the internal audit together. So no one is going to work in a silo, and there are software which are available in the market, which actually take into consideration the strategy of the organization, the business process, the risk management, and it makes our life easy for generating an audit plan. I would like to now play a small video where it will be, this is my vision. I love the video, and I just thought of sharing with you guys. This is just something from the YouTube, but it gives a good picture of the the future of internal audit, and I feel that this is the future. This is what I have already experienced in my journey till now, and it is going on still till date. Have a look into this.
This is a purely fictional video about the future of audit based on technology advancements that are happening around us. This is Rose, who's a part of one of the big audit firms and is leading the audit of a Fortune 500 manufacturing firm. She has less than 10 professionals required for the audit and significant now, the audit firm is deploying technology employees to manage the governance based on technology. These audit boards are built based on artificial intelligence and sensor real-time information about many regulations from our expectations. Now, the software backed by advanced data analytics. Let's see how she planned the audit from the start to the end. Audit software and all the required reference data like the trial balance and the historical trends automatically flow to the audit software. Audit software, which is based on artificial intelligence, also another area which our team members perform. As explained earlier, audit firm has deployed audit bots in their accounting system. These bots are based on artificial intelligence and identify anything change trends or or any workstation. Now, the planning system does not have any controls. Roles and team members continuously monitor these action reports and discuss with the management.
Sir, I think we're not able to hear this properly. Of course, we can see.
Sorry.
But sir, I think if you can just share the link, if you can just show future of audit technology, that will change the future of audit.
Yeah, I was actually, I can hear, I don't know, I'm so sorry, I don't know why it is not being, can you please, yeah.
So it's the problem of this, when you play a device, probably it has to be configured into a mode and then it comes to us.
Okay. Can you play it on your, from the center, or no, it's difficult?
So we'll have to first configure it actually.
Okay, then unfortunately, I don't know. Well, that day I was able to play, but anyhow, it's okay. It's not a major thing. What I was trying to
the way we do our motor song, we have to first get it plugged in this webinar, and then only it will come. Otherwise, even we'll not able to hear that also. So.
Okay. So sorry for that. Unfortunately, I can't do anything right now. But yes, you can have a look into this link. You can share with the team later. And then what this link is basically trying to say that there are all the future technology. For example, the bank reconciliation. In my existing organization in Batelco, we do the bank reconciliation using bots. It's no more. It's no more something like a manual process of where we used to take the approve bank statements, and then those days are gone. So it is basically mostly based on the bots. Then the data analytics, why and how it is coming into picture, because we are doing CCM controls, or we are deploying the CCM controls. So the CCM controls, once it's deployed, that means the controls are going to be tested on a real-time basis as and when things will happen. It will throw any exception will be thrown immediately, and we will come to know where the particular problem has happened. For example, I can share one example that in today's world, it's all digital money, right? So the cash, risk has reduced a lot. So the physical verification of cash is almost not there as a process, because there's hardly any cash that is there that we need to verify. But the cash has changed its mode. It has changed its mode from normal cash, the currency note, to handsets. And handsets nowadays are very expensive, and especially me in the telecom sector, I had a headache to control these handsets on a regular basis. So which location actually is not doing the stock count, or which location is actually having an issue. So that part can now be easily taken care through technology. How? By the scanning mechanism, we push all the handsets. We can scan all the IMEI of the handset on the in the boxes, yes, and then we just feed it. Automatically it is fed in the system, and the system sends that report to our data analytics tool, and then from there we can easily understand whether all the handsets has been scanned for the day or not. If some report is missing, then immediately it will throw an alert and to the management as well as to us, and we work together jointly. So what are we trying to say? That we have to embrace the technology, and even for example, the action plans that we are in the old days, we used to have action plans, and when it is how much important it is, and also it's a changing. Action plans are also having its own when the management committed for the action plan from now, and the situation now is maybe different. So we need to understand, or we need to continuously monitor those action plans through the some of the visualization tools that are available in the market, where it can say that how the risks are related to those agreed action plans are changing. So something is becoming hard to immediately take into consideration. So that's all from my side, and I hope it was something useful to you guys. But if you have any question, please feel free to ask me.
Yes, sir. So wonderful. Actually, these boards and everything that you spoke, it's so much, so relevant. And thank you for sharing these. May I now request my colleague in the council, C. Balkishan Agarwal, to please give a well-deserved vote of thanks for Buddhadeb ji for a wonderful session.
Thank you very much, CA Harpit Bhai, the Honorable Secretary of WRC of ICI. And we are very thankful to our CA colleague, CA Buddhadeb Samanta sir, for taking that session on preparation of risk-based internal audit plan by CA in this refresher course of internal audit. And sir, your preparation was superb, simply great, and definitely our members will benefit with your presentation, with your skills. And any member have any queries and they have any doubt, definitely they can connect with Samanta sir, and sir will definitely guide you. So sir, thank you very much for giving your valuable time. Thank you very much, sir. And
Thank you so much.
Thank you, BK boss. Thank you, sir. And we have a fantastic panel lined up next, and we just moving on with that. We've got a wonderful panel with Satish ji, Rajesh Bhatia sir, Rahul Katiar, and Abhiram Budhkar ji. And the moderator, may I invite Sachin Maloo ji to for this wonderful session. We're just a little behind the schedule, but we are all waiting to hear from each one of you. And when things get interesting, usually time is what we try to fight with, but I'm sure with all of you on this panel, we'll be able to make the most out of it. BK, may I request you to please introduce the moderator, and so that he can set up the session and take up the panel on changing risk and changing audit universe and audit plan. Over to you, BK.
Yeah, sure. Welcome all the panelists and our moderator, CA Sachin Maloo sir. Sachin sir is a managing director with Protiviti India, and he has over 18 years of advisory experience. He has advised several large Indian organizations and multinational corporations operating in the oil and gas, logistics, FMCG, and manufacturing sectors. His competencies are internal audit, enterprise risk management, controls and transformation, designing SOPs, and process reengineering. After spending 15 years across Big Four, he is now leading key sectors for Western region of Protiviti. So welcome Sachin Maloo sir on this panel discussion, and you are the moderator of this.
Sir. Thank you, BK. Thank you for this wonderful introduction. Sachin ji, I give it to you, and please make the most out of the entire time.
Thank you, Arpit ji. Thank you, Balkishan ji. Moving on to our session, today the topic that we shall be discussing is the changing risk and changing audit universe and the audit plan. The people who have been there at the start would have listened to Aneja sir, and would have listened to Mr. Buddhadeb as well, where we spoke about how the audit focus, the audit risk have been moving. Initially from a focus on the financial controls, then to operational controls, and now internal auditors are also focusing, in addition to the financial numbers and the operational controls, on value additions. These value additions may range from automation to digitization to cost controls to revenue leakages, and this is precisely the topic that we shall be discussing with our panelists today. Giving an introduction to the panelists, we have got four very senior professionals from the internal audit profession. All of these will represent a university in itself, and we look forward to gaining the most from their knowledge as a part of this entire panel discussion. I will take a few minutes to introduce each one of them, starting with Satish Shenoy sir. Satish Shenoy sir is a chartered accountant, a cost accountant, and a company secretary. And he has over 4 decades of experience in internal audit, enterprise risk management, forensics, and ethics. He has worked across HPCL, Onida, Lupin, Reliance Retail, Larsen & Toubro, and Aditya Birla Group, and has been associated with BCAS, Institute of Internal Auditor, the CA, Cost Accountant, Company Secretary Institute, and eminent organizations such as SOCAM, FICCI, Somaya Institute, Chanakya International Institute. He was also a part of the key member of the expert group which worked on the forensic accounting and investigation standard by the CA Institute, which was issued in February 2021. And he also runs a daily blog called The Reading Corner since 11 years, which has got more than 6,000 readers. Presently, he enjoys mentoring young professionals and underprivileged children to learn English through the DBM Foundation, which is a friendly organization of DCAS. And his fondness for cricket and music is well known across the fraternity. Welcome, Satish ji. We look forward to hearing from you. Coming to our next panelist, Mr. Rajesh Bhatia. Rajesh ji has 3 decades of experience amongst, out of which 2 decades are with Sun Pharma and erstwhile Ranbaxy, while the remaining 10 years are spread across Escort Limited and Simco Bidla Company. He is a cost accountant, he is an MBA, a CISA, a certified information security manager, and a certified in risk and information system control. So he has got that balance of focus between the IT controls as well as the normal process controls that we look forward to. From an industry perspective, he has worked in pharmaceuticals, he has worked in automobiles, heavy engineering, animal healthcare, diagnostic instrument, and chemical sector. And from a membership perspective, he is a member of ISACA and IIA Institute based out of US. Welcome, Rajesh ji. Coming to our third panelist, introducing Mr. Rahul Katiar, who is a VP Internal Audit at American Tower Corporation. Rahul ji cleared his chartered accountancy in 1997 and has joined American Tower Corporation in February 2012. His present responsibilities cover internal audit function across Asia and Africa. It also covers Global Audit Center of Excellence for ATC, and he also plays a role in the Asia business strategy of ATC. He is a core team member of ATC Asia leadership team, and he has worked for ATC internal audit function from February 2012 to 2015, and then again rejoined the GIA in April 2019. Between 2015 to 2019, he was leading Asia business strategy and acquisition integration, while also being responsible for new business initiatives. Prior to joining ATC, he was VP internal audit at Walmart India. And prior to working with Walmart India, he has worked for big organizations such as Bharti Airtel, Aditya Birla Management Corporate Limited, and BPCL. Welcome, Rahul ji. Coming to our fourth panelist, Abhiram Budhkar ji. Abhiram Budhkar ji is the head of port vertical and digital within the mass function of Adani Group. He is a chartered accountant, a CIA certified risk professional, along with a certification in risk management assurance, with approximately 2 decades of experience as a internal audit professional. He has worked with Deloitte for over 15 years and worked across key sectors such as oil and gas, infrastructure, public sector undertakings, FMCG, pharma, healthcare, technology, engineering. And his experience is across enterprise risk management, enterprise compliance, IFCs, and internal audits. He also has a key eye for automation. He has developed automation platforms for ERM and compliance management. He is a Deloitte Faculty Excellence Certified Facilitator and an accredited facilitator of board leadership by NISM and GCGF. He enjoys delivering learning and developing sessions for the CXO group on corporate governance, risk management, enterprise compliance, and internal audit. Prior to Adani, he was working with a risk function of a very eminent FMCG, where his role was risk management, internal audit, and digital initiative designing and implementation. So that is from the introduction perspective of the four panelists. I I welcome all of you on this panel, and considering the timeline, we will start on the discussion on the audit plan. So, sir, across so many years, right, and we have reached a cusp where internal auditors are expected to cover a lot more risk compared to maybe when we started the profession a couple of decades ago. What do you think? Your experience of leading internal audits across so many geographies, so many multiple business lines, so many multiple entities and locations. Just wanted your opening comments on how the process of audit planning is carried out in recent years. Maybe we can start with Satish ji and then move, across all the panelists.
Good evening, everybody. Good evening, Sachin, and so nice to connect with Rahul again after such a long time, and nice to meet with Abhiram and Rajesh as well. Thanks for this, beginning with me. So I have an open field, as we say. The field is so absolutely open for me. I can give my virgin ideas. Yes, it has been, especially after this, this pandemic, things have really changed. So obviously there is a lot of, different things that we will need to do. I completely, in sync with what Naren was saying, earlier in the first part, that unless we add value. So my one important thing is that we must focus on things that really matter. It's not that I'm trying to say that pre-COVID we were not focusing on things that matter, but I think the prioritization today is becoming something which is very, very important. The other one smaller thing, and I don't want to say it all because I'm sure Abhiram, Rajesh, and Rahul have so many other ideas. But the other point that I want to allude about is that we must have an agile audit planning, and this point came out when Buddhadeb also was talking, and Huzeifa also mentioned about this, that we must have a very agile audit plan. Nothing is static. Nothing. We have seen this world being turned around its face in the last 20 months or so. And so we have to believe now very seriously that nothing is static. So while we can make an audit plan because that helps us to allocate resources, etc., but I think we must keep our eyes and ears open and keep our ears on the ground more so than ever before. So these are the couple of points that I wanted to do, since it's just opening remarks, and I would be very happy to hear the other views of the other learned panelists.
Rajesh ji, Rahul ji, Abhiram ji, you may take your turns.
So I totally agree, and I think Buddhadeb had said it all. So it will be merely echoing what he took us through in that PPT. But essentially, you see, I agree with Satish also here. There are certain must-do areas for an organization, right? Which you cannot ignore because every industry has certain typical leakage areas, both on the revenue side as well as on the expense side. So these are certain areas which have to be done. However, overall, the audit plan again has to evolve with the changing internal and external environment. Say, for example, I'll just give a short example and then we'll move to other panelists. Again, I want to leave some field for others also. Satish was so gracious, otherwise he could have given a full lecture on it. So, you see, if let's say there is a lot of attrition in a particular business, or the management is changing, or the management has changed, suddenly the top management is leaving the organization. Definitely you need to bring that business into the scope because there is a red alert that something is not right here. So what is it that is not working? So you build it in your audit plan, right? Other things, as Buddhadeb has said, are there, but this is the agility which is important in today's world. specifically a world unknown to us, to most of us. We are working from home. I mean to say there are certain risks which we are seeing fructify right in front of us. So yes, I do agree that there are certain must-dos, but others we have to keep it fungible. You know, the audit scope has to be fungible, and of course take the audit committee and the management into confidence, as Buddhadeb had said, and that's my take on the overall. Yes.
Okay. Good evening, all. So coming to the change which Sachin you were referring to, I would say everything is surrounded a simple letter A. We were always being talking about the assurance services and also the advisory, which is typically expected out of the auditors. What has also happened now in this change kind of scenario, an additional A, which is adaptability, is also being tagged to the auditors to understand what is the current situation, to understand and then see how the response mechanism should be. And that's where what Mr. Shenoy was also mentioning about the agility in the overall plan. The more adaptable we are to the business environment, more close we are to the strategic initiative, we would be able to deliver value, which is what is more expected these days as an advisor from the auditors. Those are something which I think.
Yeah, so I guess pretty much everything has been said on this. Very quickly, what I'll say is, we actually, when we go to our global audit committee, the way we present our plan, and this is, the way we really do it, and we've been doing it for the last 2 years, 3 years now, is that we call it an agile audit plan and we don't call it an annual audit plan. What we do is we present a 5-quarter rolling audit plan. Okay, so every quarter we plan for the 5th quarter. So it's not as if we wait for year end of 2021 to decide what we will do in Q1 of 2022. By next quarter, in fact, by this quarter, we already have it in the plan, and that agility gets baked in on its own. And so, but in terms of how we do our audit planning, I think there's very little to add to what Buddhadeb said. Very little. You talk to the management. There's a top down, there's a bottoms up, you have a black box, so you just see and marry what the management is saying and what your data is saying, and then you just plan your audits.
I think one more point, Rahul, which, besides all that you said, one more thing I feel, and I don't know how accurate I'll be, maybe time will tell us, that there might be a need today to look at the orange kind of risk as well. The red risk, I think the whole management today is so focused upon. And I guess one more good aspect for our consideration could be to look at the oranges so that they don't become red. The amber part of it. That's just one more point I want to leave on the table.
Yeah, Buddhadeb.
Can I just open a very controversial topic which I have faced in some part of my life? I personally feel, this is entirely my personal vision. Please don't take it as a professional opinion, but what I feel is that we really need to understand the politics of the organization. Okay, I think this is one of the key element, and I personally, this is entirely my personal thing. Please, not as a professional, but just when you're working on a day-to-day basis, we need to understand, and also we should rock a boat when we are actually equipped ourselves. Means we already have the support. Means where we don't have a support and we try to rock the boat, it will land up to a disaster for the internal auditor himself. And this I can vouch from my own experience. So I don't want to talk in detail, but yes, this is my take. I thought, well, this is a good forum to share this knowledge and share this idea. I don't know how many of you will agree, but yes, this is what I feel.
I think these are definitely words of wisdom, and I think the last 2 hours have been very insightful, especially to listen to, again, back to Aneja sir, and he said the 2 skill set that the internal auditor should have today is actually relationship building and communication. For those who joined late, I think these were pearls of wisdom which is something, which coming from such a senior professional, it was very insightful. He said everything else is maybe given, maybe mandatory, but if you need to be successful, you need to have that relationship and that communication, and which resonates with everything which is being discussed as an answer to this question. Maybe politics, maybe adaptability, maybe reviewing things on an ongoing basis. But I think all of these are alluding to a change in our role, that not an assurance plus a advisory position that we have, and how we work together with the management to ensure more success for the management. So very insightful for myself, as well as I'm quite sure all the attendees on the call. Coming back to the next topic of discussion, what are the attributes, or how presently all those large organizations that you are part of, how does analytics helping you in getting the pinpoint focus, driving the efficiencies for each of these change in audit plan, identifying new ways, is something which will be very beautiful to listen to you. I will maybe start with a request to Mr. Rahul Katiar first, and then others can pitch in on this topic.
Sure, and to be absolutely upfront about this, we've really struggled with this concept of analytics. To make any meaningful progress, the problem is when you get into this analytics and then when it starts throwing exceptions, you don't know what to do with the exceptions. The market CFO is least interested in seeing a 100-page document, or let's say 100 list item of exceptions. So what we've done is, and I can talk about American towers in the last 10 years. So, very quickly when I started, we were a 4-market and a 4-market 40,000 tower business, and now we are like 23-market 240,000 tower business. So I've seen this grow, and along the way we've just honed and sharpened our risk assessment process. That is where we use analytics. We have something called a black box where we populate information like rate of change of revenue, and then rate of change of revenue, and then upon risk, what are the externalities that are impacting those specific markets, what are the significant changes to the the PPT or the people, process, technology, or organizational, how has the fraud and corruption index moved for those markets. And that is where we use most of it to identify the the risk priority by market and by area, by function. Apart from that, we really don't focus too much on like analytics. I understand, I go back to Buddhadeb, and he said that he does his organization does recons by bot. We do that. Some of that is obviously there, but from an auditing perspective, our bulk of our analytics is at the time of risk assessment, and that at the time of audit planning.
Sure. So, any more insights from Rajesh ji, Abhiram ji on this?
Yeah.
I just wanted to, sorry, Buddhadev, you want to say something?
No, please go ahead. Go ahead.
Yeah, so I think on the analytics piece, while I'm in that stage 2 of what Naren was saying, and I'm saying this in a public forum, but I think the biggest important thing about analytics is the base data. Many times when we do the data analytics, and the red flags come up saying that material has been purchased for even 100 rupees a kilo, and it has been purchased for 5,000 rupees a kilo, or a pen has been bought at 3,000 rupees and a pen has been bought at 5 rupees, because the code for the 5 rupee pen and the 2,000 rupee pen is the same. You bought a cross, or you bought a small 5 rupee pen, and then you pick it up in data analytics mode, and then go up to the management and say that we just checked this. And so the base data, I think, is where we need to do what we call data cleansing. This aspect is the one that requires lot of care and intelligent query. You know, ultimately the accounting system or the ERP will sing to us if you play it in tune. It's like a musical instrument. You know, if you know how to play it, it plays so well. Zakir Hussain to a tabla is like fish to water. But you know, so if that is there, I think the company, the firm, the company, or whoever will derive tremendous amount of benefit from that. And I'm sure Rahul any one of us would probably vouch for what I'm saying.
And I, you know, my only rejoinder there is that for last 10 years we've been trying to get that right. You know, the what Satish calls a data cleansing, and we've not been able to. And I'm happy to say that in an open forum, we've struggled because, you know, your
So Rahul,
operational.
we continue to have our jobs.
Yeah. In fact, on the data analytics related part, there is much which is being talked about, and also the involvement of auditors. Well, I totally agree to what Mr. Shenoy has also been mentioning about the data cleansing related process. But I would again reconnect to what Mr. Aneja said earlier about communication. And what I also found was many a times what is communicated, how it is communicated, and whether it is really important for the businesses is really key. So you would find that auditors are doing all these analytics, but the ultimate output or the deliverable part of it, it's not being appreciated much, and that's where the disconnect in the communication is. Like the instance which you have mentioned about smaller and the bigger one, or those individual topics. So it also reflects upon how do we really understand that process much in detail, and how do we really present it to the forum. While there is a large amount of progress which you see in this, which is also happening, because yes, there are many stalwarts who are actually working on to coming out clearly. There are dashboarding systems available which gives good insight, give some trends around, which would help in business decision making. That's where yes, data analytics do play an important role. But yes, communication, that is the key.
So number one, I agree with Satish on the sanctity or robustness of the master data, the underlying data. So what I will do is, from my experience, I will break my journey into two parts, right? One journey in pharmaceutical was with Ranbaxy, and later it merged with, for whatever reasons, I will not delve into it, but it merged with Sun Pharma ultimately, right? So in Ranbaxy, the Ranbaxy and pharmaceutical has always been behind the technology maturity curve, you know, over the years, but now it is realizing the benefits. However, in Ranbaxy, when we instituted the CCM or data analytics way back in 2008, and at that particular point in time, it was a pretty matured IT system that we had. I particularly found, and it's my own experience, right? I particularly found that at scheduled intervals, if we were circulating the exceptions to, let's say, a department head, I am not going to go to the CEO or something of that sort, right? Unless it reflects on or it indicates that there is some fraud which is probable here, the person was more than interested to rectify the problem. And he would also realize that there is an auditor who is continuously sort of monitoring the activity. And in 2008, I still remember, or 2007, I don't recall, there was a meeting in Gurgaon where I think 30 odd CAs were attending that meeting. And at that point in time, I was pretty low in hierarchy, let's say in Ranbaxy. And I presented our system, and I was actually told, actually the response from most of the CAs was that this is the job of the finance controllers. Why is it that, you know, audit is getting into it? But the issue is, do we at that point in time, what I had clearly said was that there is a time bomb waiting to you know, to explode, right? In the audit, will we wait for 1 year? when that bomb explodes? Or when I come to know that yes, there is a bomb, there is a time bomb, it is going to explode, should I or should I not report? That is one piece. So in my experience, if the master data is correct, otherwise we'll come out with all the garbage and it is not going to make any impact. People will just rule it out. In my assessment, even in the Rahul, to your point, risk assessment, I do agree that as of now, what we are doing is at a sub-process level, also we are going, insofar as the data analytics is concerned, seeing where the exceptions are. And those are the areas where we have to focus on, because, resources are difficult to manage. Depth is, you have to go into the depth if you have to add value to Shenoy's, to Satish's point. Management is asking, where is the value? Was this I know, but what is the value of this observation for me? What am I supposed to do with it? Right? So question is, where do I focus? That is one of the areas where we are using data analytics at the moment. However, the second part of the journey I have not come to yet. I will just quickly complete it. When we merged, there were 3 different ERPs running. When the ERP was also made common, what happened was a lot of duplicate data got into the system. Now, what do I do with that data analytics? I keep running the data analytics that these are the duplicate customers, these are all bullshit exceptions in my particular view. Management has to consider these. So yes, I do agree that if the master data is robust, data analytics can play. In my experience, it has played a very, very good role. So yeah, that's my point.
Just one more topic I want to just talk about very quickly. I won't take too much of time. Is that over a period of time, if this data analytics is run well, as Rajesh was saying, then it becomes very easy for us to actually give those data tools, even including buying the software. If you see the idea software, it was not meant as an audit tool; it was a business tool. So those analytics can be done by the business themselves, rather than waiting for the auditor to come and say, this and that. Because ultimately the purpose of audit is to strengthen the control. So that's the point I thought. A well-oiled data analytics mechanism can lead to this, which is a very, very high value add according to me. Very high opportunity for a value.
Agreed.
So very insightful. I may go on to the third topic where for the past few years there is a school of thought, right? When we started internal audit, maybe when I started internal audit, the focus was largely go to a head office or one single plant and cover all the processes there, right? But in the recent years, I've been noting a lot of our clients, a lot of companies have actually started moving to a theme-based audit. So primarily, if you're doing procurement or maintenance, let us cover all the plants and see the non-standardized activities, see the difference in procurement rate, difference in practices, and all the audit plans are getting modulated at a lot of leading organizations as per theme-based audit. We just wanted your views on this particular practice. I won't even say it is recent, but maybe last 5 to 6 years it is more prevalent. And your insights on whether you have implemented it in your organization, and what are the learnings or the benefits which have arisen out of it.
Can I take that? Oh, yeah. Sorry. Yes. So I think on the theme-based audit, I think there is no chance for auditors to say that we'll not do theme-based audits, because when we are presenting to the audit committee and we are saying that this happened at one particular cement plant or this happened at this store at a particular place, the reflexive question for any intelligent person is that how is this dealt in any other organization? And one of our jobs is obviously to share best practices, etc., etc., etc. So it's absolutely imperative, according to me, to do a theme audit where you take a particular area and then this becomes like a benchmark. At where is it? It's a theory of comparative cost advantage. Also, you may be the best in the class, but there is some area that is available in the with somebody else. He may be number 2 or number 3, but in one particular area he'll be better than you, and all you need to do is to benchmark. So many times in Aditya Birla we say that if only Aditya Birla Group knew what Aditya Birla Group is, then I think it's, you don't have to go outside. And I'm not decrying Aditya Birla Group. This happened in L&T as well. So this, if only L&T knew what L&T is, then everything else is, because there are so many internal benchmarks available, and you get best practices without having to go outside. Because once you go outside, the group or the company, there is that much information only that you will give and get. Remember, give and get. So there's no better place than within the house. Is my view about team audits. So it's imperative. It's a must do.
So Sachin, I agree with Satish. Once we implemented the thematic audits, we found that, and it's correct. I would say we cannot. First of all, let us benchmark ourselves against ourselves, right? So typically areas like repairs and maintenance, admin activities, procurement of engineering items, or even production processes per se. I would say everywhere you will find that one particular plant is doing it brilliantly and the other plant is consuming, let's say, tons and tons of steam, and it is consuming that fuel much higher than other plants. So what is it that that plant is doing better than this plant or other plants? So what we did was, over a period of time, we ourselves, when we started thematic audits, the management appreciated it, because what we did, we gave them a benchmark. As Satish said, we said, okay, this plant stands here, this plant stands here, this plant stands. What is the practice in this plant that is different from that plant? And all these processes ultimately go and sit in the corporate. Global engineering head will sit in the corporate. And now I also agree with Satish that they will ask, okay, in this plant, this scrap is being sold at this rate. What about other plants? What about other plants? Have you checked those plants? Are they following the SOP or the practices? So
I'll come back to you, sir, after 6 months.
Absolutely. So that is the answer, a typical answer, because you don't have the answer to that. So thematic audits do add a lot of value to the organization. Yes, I agree.
It's akin to the husband going and buying potatoes from the same vendor, and the wife going and buying it at a lower or higher price. I mean, I cut this joke once in an audit committee, and of course, that was not my last audit committee there. But I'm just saying that so it's something as ridiculous as that. I mean, so it does play a part. Sorry. Go ahead.
Yeah, totally agree. In fact, in the kind of business that we are in, logistics and ports related, this also becomes very, very critical, because we are also adding those assets to our existing infrastructure. And the idea over there is also to see that there is a kind of a integration, a smooth integration with the newer assets and the one that we are having over there. This benchmarking really helps. What happens is, for this particular exercise, even there is a request from the management for us to conduct such kind of benchmarking exercise to see wherever there are efficiencies which we can really incorporate at a group level. That would be of help. In the end, the group is one, and we all will get benefited if we are able to save that single through some of the efficiency in the business.
But what I would say is that, this is all absolutely fine, and we also do it honestly. We have, let's say, 60%, 50% of our time goes in process audits, what we call, or we could call thematic, or whatever you want to call it. And we do global, we will do, let's say we do a global procurement audit across 23 markets. That is also happening. But along with that, we also, we for our bread and butter in terms of compliance and also to get the pulse, we do visit our circles and markets where we do a comprehensive checklist based audit. Now, what has happened over a period of time is that, earlier it was like the frequency was higher. You would probably try to cover everything in 2 years. Now we okay if we cover it in 5 years or 4 years and things like that. But the visit is not still off. Obviously, nothing has happened in the last 1 year. But I mean, I just don't. I mean, there's no, let's say, replacement to get a pulse of the organization unless you visit that place and meet the local leadership. So that plays an important role in our overall risk assessment, risk assurance process.
Absolutely, I think everyone resonates with you, Rahul. And speaking to the HOD, speaking to the site heads, speaking to the circle heads, I think nothing can get us more knowledge about the processes, the things which are going wrong or things which are going right at a particular location, as well as at other locations as well. These conversations give us the best insights possible, which we look forward as an auditor. So absolutely agreed with you. Coming to the next topic, where technology and the audit focus has been evolving along with developments which happen, on an everyday basis. For the leading organizations that you have been working for, and all the experiences that you have we started covering as a part of internal audit newer areas such as maybe a bot or a SCADA, or even those core areas which never used to be reviewed earlier as a part of internal audit, but now people have started covering annual business plans, MIS reviews, the shared service centers, third party. What has been your journey, your learning out of it?
So
Rahul, you want to take a shot? Maybe Rajesh.
Oh, okay. So let me start. Okay. So in the past few years or last 2 years, there have been these bots, and all thanks to people like Sachin and others who have sold it aggressively to the organization. And in various cases, they have been really, really time savers. They have saved a lot of time. Say, Buddhadeb said bank reconciliation, right? It is a simple activity, but it used to take time. Bot is now doing a bank reconciliation, inventory valuation, and stuff like that. So obviously the focus of the audit has also moved, and we have sort of, let's say, it is pertinent to include these bots, the configuration, the change management, the typical SDLC cycle for these bots. Apart from seeing the output also, it doesn't, because if there is something wrong with the configuration, it will also reflect in the transactions. But you can move from the transactions to the bot also. See, if you find something wrong with the transaction, you can go to the bots. Similarly, SCADA and PLC, right? So it is monitoring the, let's say, it helps us monitor when did the person, what was the RPM of a particular machine or whatever it is. It is helping in monitoring the productivity, but at the same time, whether that data is being used by the management the way it was desired to meet. I mean to say, what was the objective of that data? The objective of that data is to monitor the productivity. Now, has the productivity gone up or gone down irrespective of the market dynamics? Similarly, let me take example of SSE you just said. So say, for example, even if it is an in-house SSE, let's say, instead of an outsourced SSE, now typical AP controls are there. But now what is additional that has come in is the productivity of the SSE guys. When did they receive the invoice? When was the scanning done? How many pages were there in the scan? And so on and so forth. So what was the time it took for the SSE chaps to receive the invoice and make the payment? So all these changes are being, and it leads us to the initial comment from Satish and Abhiram and also Rahul, and of course Buddhadeb, that the audit plan has to be an agile audit. So if you do not consider this, you are leaving out a major risk which remains unattended. So that's my point.
Yeah. Rajesh, maybe again just an add-on question. So even SCADA to be covered as a part of my cybersecurity review program. I think from your
Correct.
perspective, from Abhiramji's perspective, and maybe from Rahul's perspective as well, wherever there is utilities, infrastructure, so do we cover SCADA reviews also to see whether they are protected from any cyber risk as well?
So basically, see what happens, Sachin, is that there are, let's say for our organization, there are two data centers, right? One is in US and the other one is in India. So long as the data center is protected, right? These SCADAs do not, have access to the clouds, which means that they are not lying in the DMZ zone.
Okay.
They are outside the DMZ zone. So nobody can from outside access SCADA. So therefore, if I am checking the cyber security at the data center level, I am ensuring that no unauthorized traffic enters my organization. At least assure, not ensure, assure. Yeah. I hope I have answered your question.
Yeah, absolutely.
In case of our organization, in fact, there are two. The vision is primarily on two areas. One is on HR and second is on IT, because that's the need of the hour currently. And when we talk of IT, in fact, each of those sectors that we are referring to, like I lead the ports vertical, there is another airport, then you will have power. Each of these sectors do have their own internal IT systems, which include all digitalization and digital projects and all those. There are different systems, tools, IT, OT, both are which are being used. So how do we really get involved is one is understanding the output related part with them. Okay, where are those information used? The configuration related matters, and we have a team of skilled resources who actually conduct these kind of audits. Wherever there is a shortfall, we do go for a co-sourcing model, and experts like you also join us in that review. And every year we also conduct a detailed cyber security reviews, which is also a part of our annual plan. As and when we add, there is the digital review board wherein this information is also being discussed and shared, and so there is a lot of what I would say. There is enough of awareness at the top, and that tone at the top, in fact, drives this entire digitization initiative as well as the review mechanism for this.
And
Yeah, I mean, you know,
Abhiram, now your workload has also increased with the Navi Mumbai airport adding to your portfolio.
Yeah.
Yes.
Sorry, Rahul. Sorry to interrupt you.
No. All I was saying is that there's nothing very separate or unique about IT. At least in our world, what we do is just like there's procurement, there's IT, and just like you have let's say reporting, you have IT. So it is a very integral part of your risk assessment. So okay, nowadays you don't hear about Oracle implementations and SAP implementations, but when you used to have Oracle and SAP implementations, those were full SDLC cycle, SDLC audits that you used to. Now we do it for bots. Now we do it for whatever kind of enhancements, developments that come, whether it is GDPR, whether it is cyber, whatever. So it's not as if now, I mean, there was a time, honestly, 10 years, 12 years, 15 years back, IT used to be a domain in itself with very little understanding. At least personally, I had very little understanding because there was an IT auditor and he ran the show himself. He never kind of, he thought we were lesser mortals of the world. But now I think that's changed a little bit.
No, I agree with Rahul there.
I think IT now forms a very integral part of the internal audit scope, and which is gradually supposed to increase with the growing automation, and greater assurance on IT is required for us to deliver our assurance or our advisory to the board.
In fact, we do integrated audits now. There's no IT separately. We do integrated audits.
Yeah.
I'm going to look at procurement. I look at the IT aspects also. So it's that's how we now at least moved on. I mean, that's one thing that has changed, I can say, in last 10 years, if nothing else.
Yes. Those lines are blurred, I think. There is no Chinese whispers going on.
Absolutely. But that is something new, basis my experience, Rahul. because I think many of the organizations still do a procurement audit, and then a separate auditor comes for checking the IT general controls and the SAP controls. I'm quite sure that is a better practice, which maybe all of us have heard. And maybe the resources belong to different teams, or the resources have different priorities. Maybe the audit plan needs to be done in a manner that it can be integrated, as is happening with ATC. In earlier times, there also used to be a control self-assessment, right, on the controls, and people used to gain assurance from the management first about the control self-assessment. In today's time, your organizations, your recent experience, are we still following it, or it has been discontinued and replaced with larger different auditing techniques?
I think control self-assessment is very, very useful where there is replicable kind of operations which are happening. Say I take a experience of, say, a retail outfit, a retail company. Those shops are peas in a pond. I mean, more or less. I mean, you go to any one retail store, and you go to another retail store in another city. They're more or less designed, fashioned, the assortment, everything is more or less in a very structured way, and the processes are also more or less in those lines. I think they're doing a checklist kind of a self-assessment tool certainly helps. I mean, I've seen it in my own experience. I've also used control self-assessment in certain aspects, even in a project company. But the processes, the only requirement is that there must be very replicable kind of processes across this organization. I mean, you can't use a self-assessment tool, probably with my understanding of what CSA is all about. You can't use that tool where the processes are vastly different. I mean, if something is, so in a manufacturing also, there are so many different variants. But to my mind, to my simple mind, a branch of a finance company or a retail store of a retail outfit are some of the low-hanging fruits for us to use CSA. And what also happens is that these locations are so widely located that it becomes impossible for a central team to do it. It's not cost effective. And today, with the constraints of resources, I think this is going to be a better tool. It also creates a good culture in the organization that nobody will tell a lie. Mistakes can always be pardoned. But when something is hidden, then we have a bigger problem, and that problem becomes so big, and when it kind of explodes, it's too big a problem to handle. So I think it's a very positive thing, but we need to be carefully using it. It's a double-edged sword otherwise.
Yeah, totally agree with what Mr. Shenoy said. In fact, any such kind of initiative, it helps in transforming the total culture within the organization. In fact, such kind of initiative in our organization are also taken through the team of chief audit executive of different sectors over here. What we do is we typically call it as ITT, which is your starting with the ideation, which all are the processes that need to be converted into the CSA related matter. And next would be the transformation, changing the processes, those checklists that we are referring to once the processes are being identified. And third is the transition. So whatever we are doing, we want to have the equal kind of assurance where it requires a lot of awareness, talking to them, being in touch with them on a periodic basis to help ensure that the end deliverable is same which is being expected, because you are replacing your team with someone who is maybe a guest auditor or someone who's coming from the business. Definitely it helps in terms of putting a compliance culture, and as we said, more going towards self-declaration and then conducting an audit once in a year on those processes only. So this is something which we have already implemented, and we are aggressively in fact going into identifying those newer processes that can be rolled out under the CSA program.
So maybe the red and orange areas are generally what we cover, and green areas we get an assurance by doing still a control self-assessment, and then maybe still picking it up on a sample basis at some larger frequency, right?
Yes,
I think that's a good conclusion out of it. Moving to the domain of statutory compliances, and now there are tools, as well as some organizations still have the manual processes. Do you think something has also evolved in the recent years in the way the audit plan is framed across over the statutory compliances domain, or is it same which was there maybe a decade ago?
I think on the compliance side, a progressive organization will only have one view. You can't have a operating view and a audit view. So we must get into a position where all of us see the same document. I mean, if something is red, it is red. I mean, you ask a lady, she may say that it is crimson and whatever. But basically, I will put it in the red family and close the discussion. But I'm just saying that, and anyway, I'm colorblind, so it doesn't matter for me. But when I see red, yeah, I become a bull. But the point I'm trying to say is, the point that I want to make is that in any compliance system, for it to succeed, the typical way is to get compliance certificates and, then say your prayers and then present it to the audit committee, because you really don't know. When you ask the 5 whys, why did you sign this and why did you sign this, you'll find that there is one very junior guy who thought that there is compliance going on. So not to make a story out of it, but what I'm trying to say is the compliance management system, whatever name called, should be a document management system as well. That's the only key that can be. So if the question should not be whether tax is paid or not. The question is that upload the challan. So then you come to know if there's a certificate, that don't give the certificate number, just upload it. Then what you see and what I see is the same. There's no opinion in that. So such type of compliance management systems. So then, I mean, where's the audit? The audit is only to, I mean, my audit and the operating person's audit is going to have the same result. There's no opinion in this, because compliance is not an opinion. Compliance is either you have done it or you have not done it. There's no in between.
I think Satish ji has nailed the answer totally. Leaving no different opinions in it, but if anyone wants to add anything, please feel free.
No, totally agree. In fact, we also have a framework. Yeah, we also have a similar kind of framework, and we use a tool which is a third-party tool which helps everyone within the organization who are related, be it your secretarial board or the auditors. We just see that, and documents are uploaded. So on a periodic basis, we also conduct a kind of review of this. So that's the right process that we believe.
Coming to the next question, which probably may be the last question from my end, which theme can be discussed, and it is something which maybe if I look from a board or an audit committee perspective, there are different functions and departments within an organization which evaluates a risk universe. It may be internal audit department, it may be a employee health safety HSC department, it may be a ERM department if there is a separate ERM department. And from a board or audit committee perspective, I'm not sure if today most of the organization have reached that maturity where all the risk universe and its evaluation as high, medium, and low has reached a consistency. So, and
I have a very quick answer to that. Very one-line answer. Our chief of audit and our chief of risk is the same person.
Yeah.
So it is in our context, in our context, it is aligned. But the difference is, the only difference is that what risk the ERM function looks at. Very few, what we look at and what the ERM looks at, there is no one-to-one correlation between the two. We look at a subset of what the ERM looks at. So let's say for ETC, the biggest risk is pricing pressure. Okay, pricing pressure on across all our 23 markets. Let's say all the opcos are getting very aggressive and they don't want to. They think that we make a lot of money, so they don't want to kind of. And this is consistent. Now that is, let's say, a top 2-3 risk. It is a red. It gets monitored, but in the market you don't look at that piece, right? You don't look at only that piece. It's a piece. It's a bigger piece that you look at. You probably look at what we call in our industry a master lease agreement. So you look at that components of the master lease agreements. Are they consistent globally? Make sense and stuff like that. So that's the only disconnect. So I don't know how you marry the ERM with the audit risks.
Yeah, but the single view of risk is something that all organizations are grappling with. It's very difficult to get a one single view of risk. I think this is a topic that's what keeps our jobs, as I keep saying.
I think
So I think sorry,
Koso has been
go ahead.
suggesting it, Rajesh ji. I think that is something I just wanted to say, that Koso, the Koso framework has suggested a singular view, not only from an assessment perspective, even from a reporting perspective. So that is something which I believe keeps our job safe, as Satish ji has said. But your opinion, your journey about it.
So let me put it this way: ERM is usually at a strategic level, right? Now I'll take example from Rahul's analogy or whatever. First, the topmost risk that he said was price erosion. That is also one of the risks in our ERM, right? Now, if price erosion is happening, competitors are coming in the market, then as an auditor, how am I going to supposed to add value into that, and what is the kind of audit I will do, right? So, but there are certain risks which are at a global level, which are also compliance related, but also strategically may impact the organization. Say, for example, GDPR. If I am not complying with the GDPR, I am supposed to pay bloody 4% of the total revenue as a penalty. So it is part of the ERM also, and it is mapped to the audit plan also. And there is usually in our AMS, it's a customized system where what we have done is auditable risks in ERM are mapped with the audit plan. Whichever are not auditable, like say for example price erosion or early approvals by the FDA. So we have a 6 months exclusivity, and earlier what used to happen was that FDA used to take some time, so that exclusive period used to get extended to 12 months. Now, if the FDA is approving those applications early, what the hell am I supposed to do as an auditor? But that is a risk to the organization. It is cutting into the profits or the bottom line. So there are certain risks which can be mapped with the audit plan, but there are strategic risks which cannot be audited. It is the business judgment, basically, and how they plan to mitigate it, bring in more profitable products or cut the cost, etc., etc. Things like that. That's my view. That's my view.
But apart from internal audit and ERM, even from an HSC team or a safety team, there are a lot of organizations which will have a separate safety team. From their evaluation perspective, whether there is a uniform risk universe where our assessment and their assessment that a particular risk is red, orange, or green, at least I believe, maybe from a maturity perspective, that is one direction in which the organization should look at. Your inputs, Abhiram ji.
Yeah, in fact, I was saying that Rajesh has actually put it rightly when he talks about the strategy and the operation related part. So what is more important is, first is you need to be aware of those risks, and second is you should not be in a position to deny that risk. Many a time it so happens that we are in the state of denial that this might not happen, and then that's where things doesn't move. In our organization, typically what happens is to ensure that there is a consistency in the understanding. Our group head is also a part of the Apex committee of the board members. So we do get some insight around the strategy related part, what is happening. We are a part of a center of excellence, which our group head has also made, which typically takes care of we getting information about the strategies, about the budget, connecting more with the business, and understanding how are these risks really impacting in achievement of the overall objective. So those plan, we call it STRAP, which is a strategic planning document. There are budget document also, wherein the CAE team and the audit team also participate in providing some kind of risk which could be added into the overall risk map of the particular business that we are dealing in, that we as a sector head in fact lead. So it becomes two-way. We all are on the same page. Yes, some of the risks can be covered as part of the review of the audit, but others are we have to live with that. So through these sync of these through these forums like Apex Committee or maybe the business risk meetings which we kind of attend, we ensure that yes, there is some kind of common understanding on the risk factors and accordingly plan our work.
Sure, Abhiram. Yeah, I think that is good input on the common understanding of risk. We are just over the hour now. We have crossed 8 p.m. If there are any questions, on this particular discussion, we can go through the same. I would just like to thank each one of you for your valuable insights. It was a great learning experience for all of us, and thank you for your valuable insights.
Thank you, Sachin.
Thanks, Sachin.
I request all the participants to post their questions in the chat box. मिश्रा जी, कोई questions होंगे तो दीजिए. मिश्रा जी, I think the questions he will type into like he will copy it into this thing screen and he will present to us. So I'll request all the participants, if you have anything further also, you can please start typing it in. So in the meanwhile, yes, here we are, Sachin. So the first one is with respect to compliances, how many acts are there for compliance and is it feasible to look into compliance of all?
You ask Bhagwan Shri Krishna also, he cannot answer the question. यार हम 4-6 जन क्या answer करेंगे? Yeah, but I mean, this is the joking answer. But yeah, there are compliance tools which help out in listing out the specific tools, because there is a central act and then there are state acts and then there are municipal acts. So if I'm talking about a retail store, there is something like an APMC license. There is, the central acts that need to be there. So there is some method in which these laws can be, whether it's feasible or not, depends on competencies, depends on the system, depends on the company, depends on the political will, as Buddhadeb was saying. It depends on the political will to comply. But yes, it is a difficult point to talk about.
But one of the easier ways, I think, Satish, to deal with it, at least the way we do, is we know what are the 15 compliances that will put my director in a jail. Okay?
Yeah, absolutely. And that's how we operate.
That is right. That's 90-10 principle. It's not even 80-20. It is a 90-10 principle. So then those 15 are that you have to make sure that they're complied with. I mean, I know. I mean, that first question I saw. I mean, it would be running into a few thousand line items.
Yeah. But the problem sometimes is that the laws are so funny. You take a weights and measurement act, the standard weight. So there are some things which become so difficult to do. So whether it's feasible to look into compliance of all, the answer is yes. But it's a soft yes. It's not a hard yes.
So coming to the next question, is ERM a myth or must?
My answer to that is, till now the organizations were taking ERM a bit lightly. Now, but the organization nevertheless have been doing risk assessment for a long time. That is true. However, with this new SEBI LODR guideline, where the RMC should include an independent director, and where that independent director may ask you to, show or illustrate or demonstrate how the mitigation plans are being worked upon. He might ask questions or whatever. So it's not a myth; it's must. Or every organization understand the principle. Whosoever is asking this question, understand the principle. If you are doing a business, the benefits come with the corresponding risks, right? So unless and until you understand those risks and you say, okay, my benefits outweigh the risks, or even if these risks are there, I can live with it. So that risk assessment, or any businessman, you may go to a shopkeeper, he may not have a very, very sophisticated ERM register, but in his mind, he would know as to what are the risks his business faces. So ultimately, for large organizations, for listed organizations, it is a must that whatever risks are facing the organization or the organization is facing those risks, they have to be there, acknowledged. Either, and there are various ways of mitigating those risks. Some may not be mitigated, but we have to live with that. So this is what it is. So ERM is not a myth at all. It's a must document.
Coming to the third question, I think it is a must in today's world, and more and more organizations are adopting ERM voluntarily rather than by force. Coming to the third question,
I can personally, from our experience, I can say that our board looks at this very seriously, global board, because they don't have visibility of what's happening in they're not operating, right? So, and this drives actions. At least I've seen this drive action in multiple areas coming as guidance from the board. So it's now the point is the ERM, the way you want to do it, do you want to actually list 550 risks and then try to, again, it goes back to 80-20 and 90-10 principle. Do you want to do 550 risks and do mitigation for all of those and then keep on struggling with Excel file, or do you really want to focus on those that matter to the business?
sure. Coming to the third discussion, what is our suggested tool, I would say, for data analytics, and how important is the structuring and standardization of audit process and audit management tool to handle this. So the person who has posed the question has worked with SQL and has found it as a better tool.
Sachin, I think you would be a better person to answer that question.
It's like asking a person which car to buy, which car to buy. So he'll say the car that I'm using is the best. Yeah.
So there are several tools today that are available in the market. So you can, and a couple of them are open source also. So I think it depends upon what your requirement is, what your special skill sets are, whatever it is. I mean to say there is a lot to choose from. I mean to say there is no dearth of tools.
So Sachin, I would want to add here, see, like a couple of things, like Rajesh mentioned, there are like process mining tools you can use, like a Celonis, Pafno, or Orchestra, to look at the end-to-end process compliance. And Celonis type of tool also helps you with data analytics. Of course, for again analytics, we can use a Power BI and Tableau and Power BI for again presentation. But if you want to start coding yourself, you can start using an R or a Python, or you can use an SQL type of a database. So there are so many things. But easier, and like if someone wants something ready-made with all the queries, then it is IDEA type of a thing which is readily available. And ICI at Central has tied up with IDEA owner, that is Casper Canada. And like with your firm registration number, IDEA is available for 50,000 plus GST in the one time, and then every year renewal fees is 10,000 plus GST. So for a 10,000 rupees yearly, if you can use multiple clans, multiple queries, and you can do the analytics, and like there are a lot of videos also on IDEA which you can like learn and start doing coding yourself. So that is where it is. And one more thing.
And Murtuza, last but yeah.
Yes, sir, I'm just coming to you. I'll just add one more thing. I think ICI at Central has kept aside like a huge sum of money for developing softwares which will be made available to SMP free of cost. And there is a mail and the WhatsApp also which has been circulated. And like there, what I'm given to understand is the initial two things is like one, the whole data analytics, like in terms of sample selection, etc., they've designed something. And for keeping the documentation and the evidences, they've designed something. So I think that one aspect of this gets covered. And what I can read and understand is ICI is going to give free of cost to all the SMPs. So that was from my side, sir. Over to you. Sorry.
No, I just wanted to, since the mood was getting a little heavy, I thought I'll add a joke. We can have one more seminar whether Excel is a data analytics tool or not. Some other Saturday evening we can discuss this. I feel that Excel is also a data analysis tool.
Yes.
In fact, the
Just to
most
add,
widely used and the most successful.
I didn't want to say that. Yeah, but yes.
just
That's
to
all
add
I
to
can
what
say.
Buddha said, I totally agree with him. And then just I think one of the key deciding factor of the analytics tool will be the technical skills or the expertise available in your team. Because the user over here knows how to run the SQL query. There are a lot of users who don't even know how to run the SQL query. For them, some of the ready-made tools like what IDEA and those kind of software, where even a non-IT person can actually handle a tool, and that's the biggest challenge, and we should move towards that direction. For IT guy, it's SQL query or whatever language he knows is easy for him to handle. But for the non-IT guy, I believe we need to understand the challenges, and we need to work towards that, because each and every person needs to analyze, have to accustom with these kind of data analytics tool. Otherwise, it will be they will become defunct. So we need to take care of all the people who are in the team.
And Sachin, I want to add one more thing here, that at WARC, we have designed a course on data and digital. So like it is in 3 parts, part 1, part 2, part 3. And part 1 is like 60 hours training for 9,000 rupees, and it is covering R, Python and SQL. And they are giving data also on your laptop. They are giving you license also, and they are making you write queries yourself. And the first batch got over excellent feedback from participants. We are taking only 30 participants. The second batch is starting on 18th or something, and the third batch we are launching. The part 2 is Power BI and Tableau, 40 hours again for 5,000 rupees. And part 3 is OCR and RPA technology, again for 9,000 rupees and 50 hours. So once you cover 150 hours, and you can take only one part, you can take all 3 parts. And like this would itself cost you around more than a lakh rupees if you go outside. And WRC is doing it through some agents and like some agency. So like you can take advantage of that as well. So with that, Sachin, over to you. Sorry.
Absolutely. No, Murthu is a fair point. I think considering it is a refresher course and we expect a lot of new joinees to the profession also to attend, these are good comments for them to understand. I think again, question 3 is any common checklist for internal audit which cover major area. I would like to respond to that. That there are common checklists which you may be able to find over Google, but those common checklists will give you common observation. I think once you start working on a particular area, you will have to go a lot in depth, identify the risk, identify new audit steps to find better observation, I would say. Question 4 is something which I have not been able to understand. Maybe the question alludes that certain internal audit identify risks which are not a strategy risk, which generally is the case. Be either included in the overall risk.
Sachin, again, that is the one view of risk. I think that the point is we can explain it with that what we already spoke about. We can take the next question, question 5.
How do you prepare audit universe in a new organization where controls are still building?
I think that's the best time that an auditor should get in, because there's no point in having something wrong built and then an auditor coming and saying, look there, this is where the problem is. So I think at this point, like, when we were talking a little, Rahul was talking earlier about ERP implementation, the SAP or the Oracle. And many times audit is called upon to see that, while we are in the building phase, you come in and suggest those controls which will strengthen the system. And it's always good for the policeman to be standing at the signal rather than standing a few feet away, And so it comes down to that. I think this is the best opportunity. You can add value. What Naren Aneja was talking about in the beginning, that we must be adding value to even just survive. Forget about excelling. So this is the best opportunity.
Satish, the question is more on how do you prepare an audit universe if the organization has no SOPs defined, maybe, or it has maybe just a startup.
Very operational. If it's a very operational question, then the simple way is to just follow the CEO and his direct reports and what they're doing. I really, if it is coming from somebody who's joining the profession afresh, I had these confusions in my mind, right? You hear all the big words, you read all the big books, and then you realize, okay, fine, now how do I implement this in my organization? If you can't figure it out, just follow your CEO and his direct reports and see what they're doing. You will be able to do your audit universe.
I agree with Rahul. So like, see, you have a finance function. Now, will you do the whole finance audit, or you want to do it into small pieces like a record to report, revenue and receivable, procure to pay, and inventory, and then accordingly build those small 5, 6, 7 pieces in finance, similarly purchase, similarly this, that, and you have a list of 30, 40, 50, 80, depending on the company, organization, nature of business, which are auditable. And then you decide which are high, medium, and low, and which you want to focus on in the first year. And depending on the budget and the number of resources, whether you want to do 8 audits in the first year or 20 audits in the first year, accordingly, you will pick up your plan and go to the audit committee, get the approval, and get started.
Absolutely, good point, Murtuza. I think that answers the last comment as well. And we may now look forward to closure of this panel discussion. Right?
So,
yeah, Murtuza.
Let me take over from here, Sachin. And
Sure.
At the outset, let me first thank the more than 300 registration, the participants who registered for this internal refresher series. And we had more than 200 today, and like the people 125, 126 were still there till the end. Thank you very much. I want to thank also the WRC team for all the work and all the coordinators, okay, Ankit, Ruta, and everyone for all the support. Coming to the panel, Satish ji, really grateful. Such a senior person with so much of experience, so many different industries. Thank you very much for joining, taking out your time. Coming to Abhiram again, from a large group, Adani, with so many different businesses. So really, he also brought in different perspective and like a lot of information on the port side. Rajesh ji, again from the pharma side, and Sun Pharma, again a big name, and a lot of things which he could share from his experiences and which he implemented. And of course, Rahul. So he's again from a tower company and a global multinational, and like the whole multinational aspects of in the planning across globe, different countries. So I think thanks to all 4 of you, and a big thank you to Sachin also, Sachin, for joining us as a moderator. And I thank all 5 of them because we spent a lot of time. They were like already spent time doing a preliminary 1 call, then 2nd call, drafting the question, discussing. So I think really grateful to all of you, because like it is not only this 1.5 hours which the participants spend here, the panelists and speakers spend a lot more. So thank you. And I would also like to thank Buddha. Buddha joined us from Bahrain today, and he is the audit head for Batelco, which is a telecom company. And before that, Huzeifa, Unwala, and before that, Mr. Aneja. So really a good day spent, and like in understanding like what is a risk-based IA plan, how do you prepare a plan. And now I think we reached a stage where we have a plan ready, approved by audit committee. So tomorrow, friends, we go into the first audit which we start for the year, and we'll talk about more on documentation, evidence, sampling, etc. And that is how we'll proceed into the next 3rd, 4th, 5th day. So thank you, and see you all at 5 p.m. tomorrow again. Thank you.
Thank you. Thank you, Abhiram.
Thank you, everyone.
Thank you so much. Thanks a lot. Enjoy.
Okay. Thanks, Murtuza. Thank you.
Thank you.
Thank you, Murtuza.
मिश्रा जी, recording stop करिए.